Good morning. Happy Money Monday to you. It is July 17th. We're going to be streaming stocks, options, futures trading today. Looking at the SPY, looking at GameStop. Oh, there's a candle up there. What in the world? Watching barbecue. And the rest of our options plays we've got today. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT. And you can get on our Discord server. Link for those are in the description. I will also add a link in chat for those that aren't on. Hope you guys had a good weekend. What did you guys do this weekend? Morning, Cameron. Good old oatmeal in the morning. I never made a play on it on a position. You did. But yeah, still could be a good play. Good Monday morning. Oh, 30 cents over the weekend. I mean, there's not a whole lot of trading that goes on during the weekend. It's not in the public markets. Monday. Need coffee. Ooh, that Yaz is bumping. Let's see here. Morning electric trade. It just depends on kind of your risk tolerance. Your day trading options, like you're planning on getting out of it same day. I mean, unless if you're doing SPY or ones that have daily options, you're gonna, weeklies are the shortest you can do. Sometimes monthlies, depending on what you're trading. So as you get better, you can do shorter dates, but to learn and to kind of, not even to learn, but basically the longer the time, the easier it is. You're going to get less price improvement, but it's not going to drop as fast also. So I'd start long and work your way to shorter as you improve. Morning, macaron. Mullen announces 30-unit purchase order from Mullen Go commercial urban delivery vehicle from Newgate Motor Group in Ireland. Initial purchase order valued at $321,000. Only 68 million to go. Getting a little reaction on Mullen there. Alright, I'm gonna go through and check my orders. I've been doing a lot more good to cancel orders and just being greedy with my entry on longer dated stuff. So check pre-market, make sure there's no news on anything I have orders on in case I want to change it. Crazy pre-market moves. Good. I kind of bottomed is bouncing up a bit here. Pre-market, we've got about 20 minutes to go. GME looks like a nice head and shoulders, man. Still there. It bounced on this kind of trend line right here. I thought it was coming down last time, and it did, but then it bounced, so we'll see if it breaks through it on this go around. Mullins up 6% pre-market. Party City's up 4. Barbecue looks like it's pretty much flat. Had some questionable trades that entered last week. Come and look at it in the new week. Like, what was I thinking? I got into Funko. That's right. That was the one I'm like, guess that was purely on that huge drop. It was probably an overreaction to the CEO departing and the potential for GME to buy it. Went long. Kind of a long shot. Yeah, I need to. I don't know how long I want to hold these rad calls. I might get rid of these rad calls. Next, down 1% pre-market. Hopefully this thing continues. Made the play free last week, so no risk anymore, but has potential to go kind of crazy. I was looking at Upstart. That thing is just, it's such a wild run. 5x almost from down here. I've got to work on getting into stuff that's already ran. Just catching momentum. Had so many opportunities here. Got a bull flag, then the breaks right here. Could have gotten long. Thinking it's already extended, so you don't, or I don't. All the way up here, another entry right here. Another bull flag, break right here. Kind of flattened out, but then continued. Could have gone long here or waited, but then you had this cup and handle. We spotted. And it broke that. By this point, the option premium have already come up 500-600%, so it's like it's hard to buy into that, but sure the premiums have risen since this day it broke out of that cup and handle. And now still could be an entry, honestly. Still has a gap there up to 76. Crazy. So definitely be late to this play, but might still be a lot to bite off on this. One of these days it's probably going to just have some big candles. 200% borrow fee. That is neat. That's weird. Eyebrow Desk hasn't updated that yet. Becoming aware? Oh, the UPS subreddit. Short it for striking purposes? Whoa. Now they're talking market manipulation. They authorized 5 billion in stock buybacks. Like one of these comments, they're gonna let it get dropped from the strikes and then do their buyback and get it cheap and it'll rip. Maybe getting calls on a dip if it happens would be a better play. Morning, Tasty. Happy Money Monday to you. It's fine. That's what one of the comments said, yeah. UPS approved a $5 billion share buyback. I don't know if it's true or not, but I'm sure look and find out. So they're locked and loaded to buy a bunch of shares. What do you think about SPY? I think it's going to have a pullback here, and then we'll see if we're still in this uptrend on the cup and handle breakout, or if we're going to have a reversal. For now, though, we're probably seeing a little pullback before either a bounce and kind of continuing this aggressive trend line here, or the bulls have run out of steam and start coming down. But we'll probably have to break. We'll have to break some lower levels, or I think we're actually going to start downturning. Because they can pull back quite a bit and still be an uptrend. So I'm going to be looking out for some of that this week. It could happen as quick as today, where we kind of find a bottom and start to reverse. But so far, we're still in this kind of trend from last week, the selling trend. You can see kind of little head and shoulders. Looking for where it finds support, basically. And what it turns into resistance. Let me get some new lines on here, actually. A lot has to do with earnings, of course. We're in earnings season, so pattern will play out, but should have pretty good volatility with the big earnings. Back in January, they approved it. There you go. 6 minutes to open. Good morning. Happy Monday to you, Ace Ventura. Don't be throwing out ban bets when the market hasn't even opened yet on a Monday. Pump the brakes there, Ace. We all go up or down today? That's a heavy claim, man. Barbecue will go sideways today. That's heavy. Those are heavy. Hit the like. Yeah, just hit like. That's all you have to think about. Don't think about ban bets or where the market's going to go. Just make sure you hit the like button. Got 11 pre-market. Thank you, guys. Record second quarter GDP miss. Record high in youth unemployment. Trade for a living, of sorts, I guess. Guess you'd want to make money if you did it for a living, so. Yeah, I mean, more or less, like I spend more time doing this than anything else that I work on, I guess, at this point. Morning, Maui. Commissions on CDOs. It's been nice retirement. Alright, we got about 3 minutes to open. GME is down 0.7. SPY's kind of bounced a little bit. Looks like it's gonna open up just a little red. No big pre-market gappers on my stuff I'm watching. Mullen's up 4.5 on some news. Highs climbing up here. 30 seconds. Top moving. It's been let's see. Yeah, it's held that nice $7 level again. TBLT. Why did I sell you for barbecue? Or no, I sold it for those futures. TBLT's up 4% yesterday. I think it's gonna keep filling this gap up here. There's the market open. SPY, just huge buy on open. Big buy on the open, wow. It may move, it may. Barbecue's flat. SPY just ripped up past pre-market. A lot of buy orders on open. HCTI is up 52%. I think this is one of Zip's picks. NK is suspended. GTI is up 4%. Feels up, it's up 6. Barbecue, am I getting lag here? No, it's just not even, there's just no volume. Crazy. Yeah, Mullen had a little pre-market news. Causing a bit of a rally. I just ripped now to open. Barbecue's up 1.25. No volume on it though. Feels up 6%. Eggs down 6. Link's down 1.25. Lift is flat. I just wicking up there. Moving down 3.5. Boosted down 0.3. Barbecue hasn't moved this morning. Very interesting. Did we get news over the weekend at all? HCTI's halted. TCAT's up 4%. Phase is up 4. Tupperware is up 4. Up is up 7.5. Get happy EPS. Only down 9.9%. Just look at the chart. It looks like it wants to fill this gap. And then pretty clear uptrend. So if the catalyst doesn't happen, it's probably going to keep ripping. I should put a tamper on your happiness. Nicola's down 7. Barnes and Noble's down 5. Don't know why I was up there. Terra's down 5. Buys rallying more. Neg's down 4. Happened to Ford. Have earnings? Ford is cutting F-150 Lightning prices by as much as 10 grand. Cutting their price by 17%. That might be good news. You don't really know. Oh, you have a strangle. That's right. That's right. Well, yeah, that should work pretty well then. IV is low enough. Barbecue 2.5%, 31.98. Yeah, I heard about Ford and their trucks they have sitting around. Okay, truck at 10% interest. That only goes like 250 miles. Dish is down 2%. Tough bill, 5.5% up. I entered just a stupid futures trade, which I hadn't paper trade before. I didn't know how it moved. That was last week, and had to close out of my TBLT shares to be able to. Well, I guess not to close it, but to flip my position, go back long on it or short. I can't remember. But anyways, to close out of these shares, but unfortunately, this looks nice. It's 6.5%. So maybe I'll get back in it. I don't know. He still has room on that gap up. Oh, HCTI was halted down. Yikes. IP earnings are coming up. A lot of earnings are coming up. Wheels up 10%. I don't want puts on GME. Barbecue back to break even. Upstart's up 2%. Up now 15%. No news? Not. Eggs down 2.5. Might be holding this level. HCTI is still halted. Barbecue up 2.8, 32.10. Volume this morning is off. A little concerning. My blink's now green, 1.5. Okay. Groupon's up 4, Tough Built's up 5. Finger motion's up 5%. BBIO 60% gap up. Guess they had news. And it was good. Ride's up 2.8. Anna. Carbona's flat. Yeah, Beyond. Beyond. Up 1.5. I'm still not seeing updated borrow fee on barbecue. %12% on Wheels up. Groupon's up 5. Barbecue's up 2.5. There you go, Blink, 2%. Okay. Up a little bit. Dish is recovering some. PaySafe's up 3. That is neat. XXII is up 7%. First Solar's up 5. Barbecue 32.20, it's up 3.25. HCTI is resumed. Not too bad. Regular puts are up 27%. That's crazy. With hardly any move. That's what I love about the low IV. And then what is it? High gamma? I think it's a high gamma option. 32.50 on barbecue, 4%. News every week, Moaz tomorrow. $32.70, 4.8. We break the high from last week. I might be adding to it. Or I'll just leave what I have. It's probably good. I think, I don't know. Without news, I think we could still see a retrace back up to the highs here. 35, maybe 38. I'm not as bullish on a big move though before fundamental news anymore. Just lacks liquidity and demand, I think. High today, it's high today's 32.70. We're at it right now on barbecue, up 4.8. Mind reader, okay. Do 100,000%. Maybe, yeah. Let's see if SPY breaks VWAP here. Keep climbing. Runs up 3.5. .9% on barbecue, 32.74, getting close to that 33 cents from last week. 5%, 32.79. See if run breaks out of this range. Guess I never had. Do I have calls on it? No. Good though. $32.79, 5% still. It's up 30%, nice. Morning, Lava. Lords? Lord says it's all over? Oh man. What's up, Guts? Pretending to be happy. Is it? Is it really? Oh, 32.95, 5.6. Edging for that high. Ups up 1.2. Lifts up 0.5%. Is that it? No, 32.84. Maybe time to close. This Lord thinks it's over. He's the OTC king. There's a SPY. Getting close to the high of the day. HCTI sold off there. The barbecue 5 1/4. Make it or break it. New high of the day there on SPY. Gallons up 2.5. I think I probably sold at a good time. I was just trying to figure out when to re-enter beyond. Could wait for a break of this bull flag it's building. Or could dip by it, but no, not today. Unless it does break. Wheels up 13%. There's some volume on SPY. Barbecue rejected that high. Back to VWAP. Oh, it never filled me. I really don't like trading pennies OTC stocks. It's just a mess. What's happening? Dude, the illiquidity. You suck. Can't figure out Thinkorswim either. This. Well, SPY's still climbing up. Okay. Close back out. Made a little bit from Friday. See if we get a break of today's high. But so far it's rejected it. Not a great sign. De-risking. Made you copy funny video? This is SPY over here. Took a little long future trade, that move. Closed it out. Barbecue 497, 32.75. Okay. Next down 2.4. Link's up 2%. Lift is up 0.5%. Green's down 3.5. Teladoc up 1.25. Never ever look at Link again. Oh, Blink? What do you mean Link? SPY kind of consolidating up here. Upstart's up 7. Oh my gosh. Well, we're just talking about pre-market. Gonna have one. It's probably gonna have a big candle day sometime soon. Maybe it's today. 7.25. It's only 10:15. It was red this morning. Jeez. One of those calls that open where it actually works. I didn't say Link. I said Blink. I don't know. I was looking at Blink. Hey, Trace. Next song is Happy Serving Breakfast Waffles on Sunday brunch. That's what's up. Or Sean stays in the kitchen. Tupperware's up 7. Root, 6% on Root. Plug's up 5. Carvana's up 5. Fisker's up 5. Fubo's up 5. How's Fubo looking actually? Yeah, these squeezy ones are still kind of going. About Jamia. Yeah, Jamia's up 2%. I don't have a whole lot of exposure to these. I think Upstart's the most impressive lately, though. It seems crazy. In such a long, sustained rally. $54 is the next resistance on it. And then 71. I don't know about XRP still climbing. That was just from the court case, right? So not a whole lot to continue to rip, unless the market just keeps turning risk on. We'll probably know after the next couple of weeks with earnings what things look like. Barbecue 32.84. It's actually consolidated nice up here. Had a little rejection, but it looks like it might actually want to break out now. Yeah, I think it kind of depends on the market at this point. They've had the rally from their news, and now it's up to how much risk on is in the market still. GME's up 0.5%. 12.25 on up. Coins up 2% also. I come down a little bit here. UOP's pretty high. Not a whole lot of action today. So the volume's pretty low, I think. Maybe waiting on earnings. Roots up 6.25. Barbecue still hanging out at the highs, 32.80, up 5%. Trump wins election, you're buying DWAC? Okay. Coin? No, they're not insolvent. No. This pump on coin's been from that same lawsuit that pumped XRP. Corporate record listing and bankrupt it. We give me up 0.5%. Links up 2%. Price coming down a little bit. FFIE's up 10%. I. Upstart 8.5. Wow. Might hit that 54 today. Look at these options, see how they've been moving. Oh, drop a bit today. Ivy's like 130% on August. Let's see, July's. Getting a rally into OPEX is maybe bullish. Or a post OPEX squeeze, I would think. Little gamma squeeze. Yeah, the at the monies for the weeklies are up over 100% today. It's crazy. From 90 cents to 260. GME is popping up a little bit, up 1.2. Is it this Friday we're getting the rebalancing? ETF rebalancing, I think. $32.80 on barbecue, 5%. We can go neg. Neg's climbing out of it. Let me get back into some more calls on this thing. Morning, J Souls. Buy coming down a little bit here. Got a head and a shoulder. See if we form another shoulder here below VWAP. Upstart 8.5. Going for 54 today. GME is pretty strong, 1.3%. Logs up 7. Drop is up 2.5. Dish down 2. AMC's up 1.25. I just testing VWAP. Spy coming back down to VWAP here. Barbecue green 4.25%, 32.53. Link's up 2.5 now. Market's very slow today. Okay, I'm taking the short there. Maybe a bit premature. We'll see. Got VWAP to contend with. Other than that, I think we're building this head and shoulders. Why Upstart's been ripping? I'm not exactly sure. I know they're kind of one of the AI plays, so I would say that definitely had some contribution to it. And then Upstart's one of the ones that's kind of, I think it's in a basket of stocks that's shorted. This thing's been squeezy, so could be some, I don't know, FTD covering or something like that coming into the OPEX and earnings. Forgot this was earnings here. Yeah, a lot of this is probably an earnings continuation mixed with some AI hype, mixed with maybe some FTDs covering. Yeah, it's been a nice trade. It all started with that earnings, so that was probably what kicked it off. So glad, Granite. So glad. Not sure it was worth the risk. Morning, Ganat. I actually closed out of my barbecue this morning, so we'll see. Probably gonna be a nice sacrifice for the run. But I don't know, it seems like with lower volume, we're not gonna get too much of a move before something fundamental. So maybe retest these highs, but I don't know if it's gonna do much more without a catalyst. I don't know what it's seeming. Agreed, good not. Agreed. Birds is up 6.3. Bird. Looks kind of bullish. Volume seems quite low today. Looks like we're just waiting around for earnings. Birds actually does look bullish. I don't think my options can sell though, because they were pre-reverse split. Now they're just a liquid. Fine, not wanting to break VWAP. Looking like it wants to. I don't know. Still consolidating, I guess. Losing my patience. Do have an engulfing candle back here. Just low volume, tight consolidation. If SPY breaks out to the upside here, makes a new high on the day. Yep, SPY's breaking out there. I'm out. Barbecue holding on, 32.85 of 5.3. What a peanut. Oh, and it's just back to consolidating. Why not breaking out yet? Barbecue still the same spot. MC barcoding because the option this week. What do you mean the option? Like the option chain? Barbecue. Like it might be breaking out here. 32.99 to 5.7. There's a new high on barbecue. 33.10, it's up 6%. The high's coming back down to VWAP here. Ubo's up 8%. Upstart kind of hanging out at 7.5. Root 9. Barbecue did make a new high there, but hasn't really broken out yet. Just hardly any volume. $0.33 on barbecue, up 5%. Lots of money on the calls for AMC. Well, AMC has the catalyst of their court coming up, of a decision on that. So, that's increased the IV for sure. And it seems like AMC always has a lot of open interest on their options chain. That said, AMC, just look at the chart, is kind of at a historically solid support around $4. I also noticed that the put side though has a lot more open interest. I think there's definitely more bets on the outcome being bearish for the future of AMC. about the opportunity for barbecue. There's nothing really to it. You can exercise if you want. There's not really a tradable market though, I don't think. I don't know of anyone that's able to open unless they're like a fund or something. And as far as closing, I don't think there's any buyers, so yeah, I think it's exercise only. Barbecue Thursday is International Moon Day? What? Kai's has a French fries restaurant? Tit jacking only. Yeah, that's kind of my understanding too, Ganot. I don't think you can just exercise. There you go, barbecue. 33.28, up 6.6. Good morning, Dink. 33.29. You open 300 when it's getting delisted? This is the way. Nag's up 4% now. Never got filled on those calls. Star Wars? Yeah. Yeah, I'm not like a complete nerd about it, but yeah. Like Star Wars. Teledoc's up 1%. Thing needs to break out. Ah, Zoom's getting its breakout. Zoom, Zoom. Alright, I'll jump back in the Zoom calls. Where's Owl to come sulk? That's weird. It just has September 1. There's no monthlies on September for Zoom. What could that be? They have August weeklies, August monthlies, and then September 1. And they skipped October. Looks like Upstart wants to break out again. Barvin Barbecue getting some hype. Let's see. Still not refreshing on iBorrow. Just strange. Usually this is IKBR, I think, right? But iBorrow itself is not updating. Oh, GME is now red. Interesting. I don't think there's any bankruptcy or court hearings today. What are you playing for Tesla? Oh, they have earnings? Look at that. SPY just hasn't gone anywhere. Alright, I got the Zoom calls. Or call. I might add to it, we'll see. I'm buying on an up day, so they're up like 30% already. I just got the... I got the August 80s. I wanted more time or closer to the money, but it's $5 strike increments and I don't want 175s. Barbecue 33.39, it's up 7%. 721, 300 calls. Nice. Some of their posts over 20-30%. Yeah, it depends on where they're kind of getting it from. I've just kept a standard of using iBorrow. So I've always just kind of, that's like my baseline or what I'm always comparing it to, my control. So if that's not updating, then I don't have anything. Lift is up 1.5. Link's up 4.25 now. All right. Yeah, Upstart just broke out there. 10%. Buy something and lend them out. It's such a selfless sacrifice. See if Upstart can hit that 54 today. Morning, Jan. Tasty, my man. Appreciate it. Appreciate the dono, Tasty. The coffee will be well enjoyed.
Let's get nuts!
Let's get nuts. I watched Seinfeld last night. The one of the classic episodes, the Junior Mint in the body. It was great. Thanks again, Tasty. Appreciate it, man. Favorite court doc is due today. There was one due on Friday, and I didn't hear anything after that. I heard it was due, and then that's all I heard. It was over. Sunrun, 7%. Oh yeah, that's getting the breakout too. I might jump on calls on that too. I told myself I'm not gonna worry about not chasing, so here we are, buying calls and up days. But I've got to believe the chart. Gotta believe. Be a starter position. Average into it on the pullback. These are probably getting like pre-earnings run-ups too. Okay. Well, feels good and it feels bad. I got some run calls on the high. Chase the race. I'm waiting for that break on run too. I had the inverse head and shoulders, just was taking so long. Did cash secured puts on, which worked out nice. And yeah, got earnings on 8 too, so actually an earnings play, but I'll probably sell it before earnings. Get a nice premium before then. I think we're just gonna start getting some pre-earnings run-ups. Sold 47,000. Nice, well done. For some fun. No, that's smart. You have over 200k in it? Jeez. Pierre's on the boat. Piss off. Yeah, I sold some today also. And by some, I mean all. I don't know how to scale. Oh, I wasn't paying attention. SPY's making new highs there. Just slowly climbing up. Linked with a nice bounce, 5.3. Upstart, 9. Wonder when Lyft will wake up. Soon, por favor. Seven and a quarter percent on barbecue. It's real slow, low volume, but melting up. Actually kind of unusual price action that we've seen on it in OTC. $33.45. Oh, is that the current price? Selling is contagious. Yes. SPY climbing up some more. A little bit. SDC's up 6. PaySafe's up 5 now. Let's see, where are levels up here? I guess I didn't like my entry on barbecue, so a little bit quicker to close. If I get a nice entry where I like it, it's easier to hold. But starting with a bad entry, it's just starts the whole play out wrong. Whole trade. But this thing does look good. I think 35.70s in the future. Maybe that 38.79. part of me thought come today, though, these shares would be worthless, so. What's Opera? Norway-based company, web browser development. That's had quite the chart. Look at that thing. 700% since November. They offer shares or something? Oh, is this the web browser? I didn't know they were public. 300 million offering. They're Norway based? I had no idea. Bella keeps telling me to close my Furby's business. Honorary shares. They send you a warning about your 2 shares you're holding? Listen, those 60 cents of value you have there, you should take that risk off. Thanks for letting them know what's up, setting them straight. Alright, SPY getting up to what, pre-market high, I think? Oh no, the high from is that Thursday? If that's any point of resistance. There's a little breakout on SPY. August 2023. How formal was that complaint? Did you send it certified mail to their headquarters? Did you drive there? Did you hand deliver it? Or did you light a bag of crap on fire on their door and have a note? Email, probably go to spam. Well, I didn't really have to dig any deeper to get the reversal. Looks like we're on our way, continuing the trend.
According to this analyst.
Well, Morgan Stanley feels like Apple can go all the way up to $220 a share, and with a bull case scenario that is even higher than that, I'll get into. But this $220 price target from $190 represents around a 14% move to the upside from where it's trading today. The analyst also kept an overweight rating on the shares. Now, here's one thing that I want to note. The fact that Apple last quarter, we heard a lot about the company pushing more into India, right? And so this analyst is actually pretty bullish on India as an emerging growth driver for Apple. Even though right now India just makes up about 2% of Apple's revenue, the company believes that the country will account for around 15% of Apple's revenue growth over the next 5 years, and then 20% of the installed base growth over the next 5 years. Now, the analyst also reiterated Apple as a top pick, and
the sound, I can't get rid of the sound.
Valuation is now up to $270 a share. That's around a 40% move to the upside from where it's trading today. And just so we know, we remember, you can see on the screen, Apple is still trading at its intraday highs, its yearly highs, and its
I'm rejecting that
highs, and it's
for now.
around 48%.
Probably be looking for a long.
We'll hear more about the earnings picture when earnings come out in early August.
That's right, not until August.
Looking for a nice dip buy. Maybe VWAP.
Above its median price target.
Maybe not that low.
90, so we'll see if some other analysts play catch up. In 220, not the highest on the street, but almost. I saw Citi is at 240. It's 220, the next highest. Renita Young, thanks so much.
Of course.
Spotlight two of the biggest earnings names this week. That's Tesla and Netflix. And who better to help us preview those stocks than Investopedia's Caleb Silver. Thanks so much for joining the show, Caleb.
Good to be with you.
So, Caleb, we were just hearing from one of our last guests about how important outlooks are going to be versus the actual number. So let's start with Tesla, obviously just unveiling its Cybertruck that's finally coming off the assembly line, so we know that won't impact
Tesla.
Last quarter's numbers. But how important could that be for guidance as we look ahead for Tesla?
Yeah, Tesla needs to keep investors excited, and they've been very excited. The stock's up some 133% so far this year. It's been a good year so far for Tesla, and deliveries have been good. So new product announcements are always exciting, and Elon feels like he's been a little distracted with other things. So anything new coming out that investors can get excited about. Deliveries were outstanding. They pre-announced those, I guess, last week or a couple weeks ago, coming in at around something like
7.25% on barbecue.
66,000. That's a record for Tesla, but coming off a very low base the prior year because of the China shutdowns, because of other reasons. So
I got filled on my neg calls.
But they had to do a lot of discounting
to
get those deliveries going, to get a lot of those sales going. We're going to see if they forecast they're going to have to do more discounts and more incentives to do more sales in this quarter and for the rest of the year. That's a big thing to watch. Those automotive gross margins are huge for Tesla.
Yeah, let's talk about that. What the impact, the cost of those discounts, if you will. What's the key number that we're looking for in terms of margins?
Yeah, well, in the first quarter, automotive gross margins fell around 19% year over year because of the steep discounts for the Model Y and some other popular models there. That obviously impacts margins. Margins impact profits. Usually not a huge concern with investors in Tesla because they love the company so much, but this is a key metric. It's becoming more and more important. It's great if Tesla can move more units, but if it has to discount 20% or more on the popular cars, that's not great for the bottom line. We're going to keep a close eye on that going forward. And also, we want to see the impact of the charging stations, the partnerships. They had that announcement last week with Mercedes. They're going to use Tesla's charging stations and their apparatuses here.
Rallying up a little more.
Can they get more
450.68.
More partnerships going?
That next resistance.
So they have the charging revenue as well as the automotive sales revenue. That would be a nice mix.
And Cybertruck's certainly the next cool thing for Tesla, but that's been an announcement that's 4 years in the making. So we've been highly, anticipating that. What's the next big thing for Tesla?
It's going to be the truck, obviously, but it's going to also be about the automated driving. It's going to be about some new models, and potentially we're going to see more news on the charging partnerships. As I said before, Mercedes was the first to jump
Upstart
on.
11%.
Partnerships like that, and then it's all about competition. EVs are only 2 to 3% of total market share of autos here in the United States. A little bit bigger around the world. We got to get up to 8-9% before we're talking about meaningful revenue, not just for Tesla, but for Tesla's competitors. So the truck's a big deal. What are they doing in trucking writ large, but also what's new on the model front? And are they going to have to keep those discounts active? Remember, the Inflation Reduction Act, that offers up to $7,500 for EV owners if they buy cars that were mostly manufactured here in the U.S. Well, most of Teslas do apply to that. Is that going to drive more sales here in the second half of the year and into 2024? Those are the key things we're going to be watching.
And then moving on to Netflix, hitting a new yearly high today. Shares up about 2.5% right now. We've seen a lot of positive analyst commentary regarding its crackdown on password sharing. Should we see that translate into anything on the bottom line yet?
Well, you'll probably see it in new subscriber ads, both because of that and because of the cheaper ad-supported tier. So analysts are all over the place when it comes to how many new subscribers Netflix might add, but I've seen around 3 million as a target to watch. Anything more than 3 million is going to be a very positive number for the past quarter, and then the forecast for the rest of the year very big here. If we get 6 million, if we get a 5-6 million handle on their forecast for the next quarter, for this current quarter, that's going to be strong as well. It shows that the password crackdown thing has been working, and also the ad-supported tier is working as well. If they can get both of those things going at the same time and continue to grow subscribers in what's going to be a very challenging content environment, that's going to be good news for Netflix, good news for the stock.
Okay, so active subscribers still really the key metric there. We know that competition in this space is certainly heating up. There's Hulu, there's Disney, there's Max. Is Netflix still the one to beat at this point?
Just because of the size of the installed subscriber base, yes, absolutely. And programming, you could argue now, is pretty much equal. There's parity in programming, but programming and content has a huge problem. A strike by the writers and now the Actors Guild. That means no content is going to be produced here in the second half of the year until that's resolved. Netflix has a pretty good stable of recurring programs it's leaning back on here, but it's all about what's coming next, and there's not a lot coming next. If you look at the slate that Netflix is promoting, it's a lot of shows that have been popular and that are going to continue to be popular in new seasons. I'm talking about The Witcher Season 3, Top Boy Season 3, Love is Blind Season 5, 5, The Crown Season 6. These are all hit shows, but now we're into the 3rd, 4th, 5th, 6th seasons of some of these. That's not new, exciting program. Netflix needs another Squid Game or something to come from outside the U.S. to get more subscribers interested for second half of the year.
It's a good time for me to be kicked out of Netflix and not actually sign up and pay for my own account with no new programming. But just quickly, the impact of potentially writers and actors now being on strike for who knows how long. How would that impact Netflix?
Well, it means no new programming, again, in production now. A lot of the programming that you're seeing is stuff that's already been produced. That means they're not in production now. That's a 2024 problem. But investors are always looking into the future. And if the future is kind of the same slate we see right now and just a mix-up of what's happening in the library and new seasons of shows that were good but are losing popularity, not great for Netflix, but it's not great for Disney. It's not great for Max. It's not great for any of the streamers or the content providers right now. It'd be great to see this resolved. But what does resolution mean in terms of the screen actors and the writers right now? They want a lot and they deserve something, but what does that mean in terms of any sort of legal arrangement or any sort of settlement that's going to come to pass? How's that going to impact their bottom line? We don't know yet.
Right, and ultimately could cost all of these streamers quite a bit more money. All right, we have to leave it there. Caleb Silver, editor-in-chief at Investopedia, thanks so much for breaking it all down for us.
Sure.
Coming up next, it's time for the Disruptors. Tom White will drop by with the latest AI developments for Datadog. Plus, we'll get an example trade in the name. That's next. We'll be right back.
Let's walk through how to analyze a company's financials on thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary takeaways on key metrics and what drives the stock. Takes a more numeric look at similar information. If you find any of the information particularly helpful, you can print it out or take a screenshot. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
When traders tell us how to make thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. thinkorswim by TD Ameritrade.
Welcome back to Trading 360. It's time for the Disruptors. Tom White, co-host of Fast Market, is here with today's company, which is Datadog. So first of all, welcome, Tom. Great to have you here. Taking a look, Datadog, one of the top performers on the NASDAQ today. It's the third best performer. Shares up more than 4% right now. What's behind this move higher?
Well, I think it's based on a couple of price target hikes that we saw both out of Mizuho and Oppenheimer. Oppenheimer put it up to 120. Mizuho a little bit more tepid, basically raising the price target to where the stock's currently trading right now. So you look at Datadog, provides monitoring and analytics software services for cloud computing companies. Customers benefit from enhanced basically transparency. Multiple data streams are feeding various cloud or on-premise programs, and Datadog actually detects when there's an issue with their app, with data flow, and then they help solve those problems as the software gives its the users visibility to how their software is performing. This software as a service company grew last quarter about 33% to about 482 million. It's pretty impressive, right, Caroline? But at the same time, it's the lowest quarterly revenue growth figure that the company has reported as a public company. Now they're starting to roll out more products, more based on the security aspect of this. But one key note in their last earnings call, Caroline, was that they didn't really mention AI that much. And you would think with this type of cloud-based service that this would be right in their wheelhouse. I think one of the key takeaways from the price target hikes out of these companies today is
it didn't mention AI that much. I was kind of disappointed. It was only 4 times instead of 27.
For each customer moving forward. And if they integrate more AI into these products, that's also going to help.
11:45, 15 minutes from EU close. Hope you guys had a good weekend. Hope you're having an even better Happy Money Monday. I appreciate your likes. We're at 30 on the day. Not too bad for a slow Monday.
Anything on their earnings, which is
SPY is just melting up here.
As far as AI and building that out.
Low volume melt up.
Environment that we're in right now, companies are more adept to spending CapEx spend on IT infrastructure.
Barbecue is melting up also, actually.
Now, just 3 or 4
Strange.
months ago, everybody was concerned that companies weren't going to spend money. So that could definitely be a bonus for Datadog moving forward. And 2 of the analysts like this for the longer term. But the price targets aren't that much higher than where the shares are currently trading.
Yeah, at 120, I guess implies almost $7 upside. But I took a look at the median, and it's 100. So that's about $13 lower than where it's currently trading. So given the fact that it's already up more than 50% year to date, and it's trading higher than its median price target, how would you trade it?
Well, I would probably try to avoid that earnings event. So the example trade that I have does that, right? It expires before that August 8th earnings event. So that creates more additional volatility, but also more risk. So I looked at something a little bit neutral to bearish on this one, where even if the stock continues to move higher, I still have that probability that I can remain profitable on this type of strategy. So looked at just selling an out-of-the-money call vertical to the upside, selling the August 4th weeklies, so these expire in just a couple weeks here. Sell the 118 strike call and then buy the 123 strike call. So a short
Low volume on tickers. Yeah, low volume day. Nick is calling.
Above the current share price by
Nick.
$5. If I can collect roughly about $1.30 credit for that, that's what I can.
Yes, I'm here, Neg.
But I've got a better probability of success because my break even is all the way up there at 119.30 to the upside. That's just below 52-week high.
I'm looking into it. I'm looking into it. I already have Neg calls, man.
We need some consolidation after
this looks nice.
50% run in the shares. You want to avoid
picked up
that
calls
event.
back here.
Strategy takes advantage of that
let's see. Right here, I got calls. I'm around. Let me see when I got these. Let me see.
You keep the $1.30 that you collected. If it stays
curious
where it is, you get to keep that option
about these
premium
calls.
that you collected. Or if it goes up but remains below that one.
I got more today though. I sold some and then got back. I sold some yesterday and then got back in more today.
A little bit more conservative. You still do have risk, about
$3.70
per spread on this, but the probability of
I got them this day.
118 strike being out of the money at expiration is about 70%. So you've given yourself.
Not sure why it chose 7-11. Had a clear trend line there. Could have waited just one more day. So got pretty close to time in the bottom on it.
What are you going to talk about on the show?
We're talking meta platforms.
Yeah, it looks good. I like it.
A big one that we're going to cover. Morgan Stanley ahead of earnings, and then Etsy. Etsy got.
I want to see a big move on Neg. It's been a while.
Stock's been struggling this year.
240.
All right.
$3.
Actually higher though, despite that price target cut. All right. Have a great show, Tom White. Thanks so much.
Thanks.
Coming up next, our panel.
There you go. I'll show you. I'll show you the proof of when I bought them.
Earnings bounce last week, but is fading a bit today. As you can see, it's actually
I bought 7-11 Neg. Got August 1.5 calls. Sold some and bought back in. I chased some stuff today too. There you go, barbecue. 34 cents, up almost 9%. I think we'll probably hit that resistance today. Seeming like with this melt up. Congrats to you too. It's a real David Attenborough. Yeah, neg is a bit of a sleeper. When it wakes up, it goes crazy, but it takes a while for it to wake up. 10.5% on barbecue, 34.50. Told you my sacrifice would be well remembered. Need out of neg? You're holding it from sometime? Upstart 11.5 now. Ooh. Run's moving too. I chased run and zoom today, but I think those will be good. Nice breakout on run. And then zoom I closed out of, waiting for this break. Now we got the break, so got back into that on a green day, but it's okay. I think I got enough time. 10.5 on barbecue.
boost costs. I was taking a look. You have an outperform rating and a $555 price target on United Health. It's currently trading at just below 480, so quite a bit of room to run. What gets it there, and what in the report makes you bullish that it will get to there?
Yeah, about 50% upside to our price target. I'm more optimistic the stock gets there in 2024 than it does by the end of 2023. There wasn't a lot in the earnings report to be optimistic about. The stock obviously rallied 7% on Friday, but mostly we think because of really extreme negative positioning and a lot of concern. The stock was down $60 into that print because of people's concerns, and they were able to make the earnings number with investment income, some non-recurring investment gains, and lower G&A. But unfortunately, the two most important segments, Medicare Advantage on the health plan side and Optum Health on the other side of their business, missed margin expectations by about 200 basis points. So the one positive from the quarter would be you could absorb the type of trends they'd warned about, and David alluded to on the medical device side, and that we're concerned about, and still have some levers to pull in investment income, G&A, for some companies, tax rate and share repurchase to sort of preserve the EPS. It's just the quality of the earnings has deteriorated. As you move into 24, I think the street can get a lot more optimistic about 2025. And some of these headwinds diminishing for 25 and the groups and United in particular earnings growth accelerating in 25. I think it's premature for the market to be valuing that. So I think we see the back half of the year, United's in a trading range, and we're more optimistic they'll hit our 555 target in 2024.
All right, United currently basically flat right now, but still a loser on the year, down about 9.5% year to date. There are some winners. Eli Lilly, Novo Nordisk, obviously up about 20% on the weight loss drugs. But David, just want to give you a chance. I know you mentioned some medical device names you like. Any other top picks in this space?
I talked about Intuitive Surgical. I like that name. They're a leader in robotics, and they've got tremendous runway in Europe and in Asia. The company said that in China, their Da Vinci machines are basically used round the clock. Like 3 times the utilization of equipment in the U.S. So surgeries are being done, daytime and into the evening. Which is just something not done. In the U.S., it's basically 1 procedure per day per machine. But, if they're doing 3 per day, at some point, they're going to have to buy more of these machines. And each machine brings in a lot of consumables, the points of the surgical. We really, really like Intuitive. It's got a good run so far this year. But we continue to like it, and as he talked about the J&J, they got I like their pipeline, I like their M&A strategy, which I can talk about a little bit more, and of course, they're about 40% of the company is medical devices since they spun off consumer.
Oh, sorry about that. David Tong, Argus Research, and Gary Taylor from TD Cowen. Thank you both so much for sharing your picks and your insights. That's going to do it for Trading 360. I'm Caroline Woods. I'll see you back here at 2 p.m. Eastern for the watch list. But stay tuned because Fast Market is next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our Active Trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I'm Nicole Petalito.
Hear that saying?
Yes, yes.
So boredom spreads, or trading when you're bored, or just bored in general in the markets is never a great productive thing. So you look at the computer, I'm like, okay, more airlines, more banks, here we go. Yeah. Let's get to the good stuff. Mm-hmm. Let's get to Netflix, let's get to Tesla, let's get later in the week. And it's like walking in the water, right? You start walking in, it's light, it gets getting a little heavier. Let's get to the good stuff.
Yeah.
I'm tired of it. Okay, airlines and banks, we get it. We get what's going on there. Let's move on.
Wide array of earnings and data.
Yes.
But light on this Monday as far as data and earnings goes. But one of the stocks that's in the news having solid gains this year is Microsoft. The turmoil with the takeover of Activision Blizzard continues, but it got a little bit of a reprieve over the weekend and late last week. Let's bring in Jenny Horn, markets correspondent here on the network, to help us walk us through this story, Jenny. This is just, get it over with if you're going to do it, right?
I know, I completely agree. I feel like this has been the longest awaited M&A of all time, although we are seeing a read that it could perhaps lead to more M&A, which would definitely be good news. But reports we got over the weekend that Microsoft announced a binding agreement to keep its Activision Blizzard Call of Duty franchise, which is like the banner franchise for Activision, on, of course, Sony's PlayStation consoles. Now, this was a pretty major deal because Sony has since been one of the main concerns. Sony has voiced really concerns about how the fact this would be anti-competitive and this would then obviously harm PlayStation's demand. But Microsoft's chief executive of gaming did tweet Sunday they look forward to a future in where players globally have more choice to play their favorite games. I see this totally as everyone wins here. Why would you want to cut out an entire console for your Call of Duty franchise? This makes perfect sense. But further details were not immediately given regarding the deal, but media reports did say the deal is for 10 years and applies to Call of Duty, similar to a deal Microsoft struck with Nintendo earlier this year. Ever since, though, Microsoft and Activision have announced plans to merge back in 2022, Sony, as well as government regulators, have just been pretty vocal about these concerns. So it has, like we said, been a long time coming. The deal, though, could be enough to appease now the UK, which is the one remaining government body that is opposing the deal. They extended the deadline of their review of the takeover to August 29th, which is now 6 weeks later than planned. But on Friday, Bloomberg did report that Microsoft could sell some of its cloud-based market rights for games in the UK to then appease the CMA, or the UK's antitrust watchdog. So they are working on getting that approval. We did get the
You bought neg after expect to 75.
They did shut down the FTC's request for courts to pause the deal while its
Sorry.
appeal was heard and then denied. So that was
19 American dollars.
did give the application the approval back in May. So now we are just waiting.
Why are you still holding it?
CMA in the UK, but we do have 6 weeks until they have that next deadline. So makes sense to see Microsoft making a modest move to the upside today. Activision was
Maybe
seen as
maybe
really
GME will
winner.
buy it
And I
and
just think if
save
you're
you.
an Activision shareholder, you just want this to be over with. It has been the longest time coming.
And I
hope that now, with pretty much all of the cards falling into place, that we would see this deal go through.
Jenny, you know, this has been fun to watch play out, because what you realize when you deal with Microsoft in the courts is they're playing chess and other people are playing checkers. I think this, you know, this is not as good for Sony as everyone thinks. 10 years.
barbecue 10.5 consolidated nice up here.
Quickly, right? And Microsoft has that.
Be crazy if it made its whole move today. So we might have a sustained rally. We can break these highs.
The really, I think, remaining question.
Buy looks like it's setting up a cup and handle.
Activision's made
It
money.
made its cup at this point.
Deal was announced. Some $4
But
in earnings.
could even come up to 450 for the very top.
Do they pay it in a special dividend?
Might do it in two legs. Handle here, another cup, another handle.
What happens to the earnings that Activision has had?
Yeah, that's a really good point, Kevin, because I feel like typically when we see
11.12% on barbecue.
Actually, like losing money slightly on the deal, or they don't actually get a premium for the company the way that Activision has traded, and it's been sort of a wild market. It's no surprise Activision has gained since this deal was announced in 2022. But then, yeah, it's a really good point. What does this look like for Activision and now the new entity being Microsoft?
RC does buy all stocks.
To me, it would be a concern because Microsoft is such a massive.
Yeah, I've thought about neg being a good used company for them to buy.
The gaming segment, so will be interesting to see sort of how that plays out. But we're still so far away. I mean, 6 weeks out until this UK deadline.
Yeah,
I still feel like this deal.
38. What do you got? 38. Yeah, I've got 38.79.
To me, in terms of trading,
But even this 35.70 levels,
we do still have
more of the
Microsoft
resistance, I
earnings
think.
over that time frame. We finally get some
But
of
we'll
these
see.
tech names really kicking off next week. I was listening to you guys say we're done with the banks and the airlines, although earnings really ramp up to me next week. It's like the Super Bowl of earnings. So we will have to see, obviously, how Microsoft fares, but a name that has been a relatively
Look at that volume on barbecue.
up over 40% this year, and it's sort of amazing to say that of the Magnificent Seven, this actually puts it in the bottom tier of the performers among those 7 stocks.
Elite 8, Jenny, not Magnificent 7. We're going with Elite 8.
What's the 8th?
You got to throw Netflix in there.
He's trying to sell T-shirts, Jenny. I think he's trying to copyright it and sell T-shirts. Don't buy in.
Yeah, I can see Netflix being part of that's fair.
Yep, there we go. All right, thanks to Jenny Horn, markets correspondent here, breaking down the Microsoft Activision drama as it continues. Now, let's bring in Alex Coffey, senior equities contributor here on the network. Alex, I wanted to kind of get your take. It seems like markets are in this Goldilocks state right now where unemployment's really low. Soft landing is becoming more clear for the equity markets. It seems like companies maybe aren't pulling back on CapEx spend as a lot of people thought. The word recession doesn't get used too often. Is that the kind of market that we're in where, hey, everything's kind of working out right now?
It has been, definitely. I think it sets the stage that if some of those concerns return, there can be kind of asymmetric risk to the downside if the picture is being interpreted different than it ultimately turns out to be. But yeah, no doubt. I mean, the inflation picture has improved. Sort of the dire nature of some of the economic projections seems to have subsided. The banking concerns of March, while I think the impacts are largely still to be had in terms of credit crunching and tightening lending conditions. But the headlines of bank failures aren't happening on a daily basis like they were a few months ago. So undoubtedly, I don't think that it's even really up for debate. Sentiment has changed, and you see that in some of the surveys starting to show signs of improvement. But I think a lot of this hinges on a lot of things clicking and kicking into gear for this second half of the year. We can only get so far on hope and optimism for the future. At some point, you're in the future, and you need to start seeing that actually show up in the data. So the question is going to be, is it some of these supply side issues finally working their way through the system, post-COVID, and that's why we're seeing inflation come back down? And if you start, continuing to fight these cost pressures, do you cause outright deflation? Do you cause, recessionary activity and hard landing situations? To me, that's what I'm worried about and what I'm looking for. But we're not seeing it yet.
Yeah. To that point, Kevin, valuations getting pretty stretched on a historical basis for a lot of the individual names and the indices themselves. Is that what the crux of this earnings season is going to be? Is, you've heard all the rumors, the economy's doing better than a lot of people expected at this point. Can we navigate an earnings season where maybe we do see some guidance getting hit here a little bit?
Well, it's tricky because we don't have a feel yet for earnings because we all knew the airlines what they were going to do, and we had a pretty good idea what the bank financials was going to do, even though you can make a case that financials, it was kind of a sell the news kind of thing there. But the airlines have done fairly well, some of the good ones anyway. We've got United Airlines and American coming up again. All these airlines, their charts look incredibly strong. So you don't know, what's the narrative coming out of earnings season? Is it a sell the news when it comes out? Is it, they're going to have to do some spectacular things to hold at these levels.
Yeah.
But you do have some incredible bullish macroeconomic factors like the dollar below 100 again, like yields back down here significantly below 4%. So there's a lot of good things going on. But as you know, earnings season takes on a different tone. It's a big economy made up of a bunch of stories, and sectors will move. I think you just got to wait and see. But the questions that we'll ask is, look how far this stock has run, but look how far it is from the all-time high. That's kind of my theme going in, because Netflix still $240, $250 off its all-time high of $700. So Tesla's the same way. There's a lot to there. The one thing we should take, Nate last week talked about the overall PE of the S&P getting stretched. That might be a bigger factor.
Yeah, you look at the S&P 500.
Overdone.
Yeah, S&P 500. The Nasdaq 100 on technical levels are overbought at this point. But we've got a chart here I wanted to kind of bring up, Alex, and kind of highlight what Kevin and I have been talking about for the last couple of weeks. Is that divergence between the dollar and the S&P 500. I mean, that is as wide as you're going to see these two asset classes at this point. And this is when I start getting a little frightened, like, hey, let's start looking at technicals or something, because, a parabolic move in the S&P 500 that we're seeing over the last several months, is that sustainable in this type of environment? I don't know. Your thoughts?
A lot of it's due to the yen. We're actually starting to see an awakening of the long slumber in Japan. Look, I think you got to look at things how you have to look at them on the surface level. In the case of the U.S. dollar index, it's maybe the best metric we have for the U.S. dollar. but it's very, very, very weighted towards things like the yen and the euro. And so if something changes substantially in one of those two products, you're going to see big moves in the dollar. So I think all else equal, had we not seen a substantial move in particularly the yen, I would be more alarmed by that divergence. But because it seems so yen driven, it doesn't seem to me be kind of the risk on or risk off indicator that maybe you would think. If anything, I would think a higher dollar would be more indicative of a risk off situation. So if anything, the yen is impacting that. But I thought a story from last week, Tom, that was very kind of underappreciated and underreported on was we heard from ConAgra Foods on Thursday morning, and it was a really disappointing report in terms of the outlook, and the stock didn't do great. But to me, what was most interesting is the company's leadership talked about how well the consumer had hung in there for several years. It had been consistent and reliable. But they said, why now? Because in March, something changed. Well, something did change in March, and that was credit started to tighten.
Right.
There was bank failures. There was lending standards got a lot tougher. And so we haven't seen it completely play out, but we're starting to see signs that it is. You're reading articles about Disney not being as packed as it would be expected to be at this time of the year. Discounts around their Christmas holiday and the holiday season in general, not things you typically see. So I think we're still in early innings in terms of some of this fallout. Like I said, just because we're not reading about bank failures doesn't mean that what happened in March is something we should just completely disregard.
Yeah, especially with you know, the prospect of another quarter basis point hike next week from the Fed.
BGLC's getting uplisted.
One last thing on the U.S. dollar. If you want a better perspective of the U.S. dollar, you're gonna find us doing this a lot lately. The last 2 years aren't indicative of the U.S. dollar's history. Go back, put up a 15-year chart of the U.S. dollar. It's been a lot of time between 80 and 90.
Yeah.
Jenny just got that 80s throwback.
At the 2010,
Steez.
It was in the low 80s a lot, in the mid 80s, and then in the.
And you're just showing your age by thinking it's not cool, Kitty.
Around the mid to high 90s, but so it hasn't been there. There's my 15-year weekly chart of
11% on Upstart.
You can see, I mean, that spike that we had.
Happy Money Monday to you, Daniel.
We were the more hawkish of the of the central banks. It's starting to unwind now, and look at how long. I mean, you know, so the dollar is still historically elevated, if you ask me.
Yeah, and we've got the euro and the British pound at 52-week highs, also putting some pressure on the dollar.
52 weeks though aren't 15 years.
Yeah, that's true. And I think if you take a look at you know, the multinationals, how will this lower dollar off of those levels that we hadn't seen for years? How is that going to impact their earnings moving forward? All right, guys, take a quick break. When we come back, we're going to take a look at Morgan Stanley. The investment bank has lagged the overall market so far this year. They report earnings tomorrow morning. Fast Market's coming right back.
I kind of breaking trend a little bit here. See if it's just consolidating before a rip, or if we actually start breaking down and a little bit deeper of a dig, possibly to VWAP, which could be our handle, our first initial handle on this cup. Barbecue 34.64, up 11%. We've got 35.70 for a pretty good resistance area, and then 38.79. can see the selling starting to taper. Resistance line. Then we had that breakout. That's why Thursday looked like a pretty nice entry, just TA wise, but doesn't change the sketchiness on holding this thing. Buys coming down here. Now if we get a handle breakout, yeah, then we're looking at, I think, 50 cents, 60 cents. So I might jump back in if we do breakout. Breakout and retest. Not sure if we're going to be able to do that without some kind of news, but trade trend, I guess. Over 25K for me. I'm holding for a bankruptcy exit. Going to dollars. Yeah. Yeah, if they get out of bankruptcy and they keep his ticker. The run calls we bought at the high are actually green. Zooms are down a little bit. I'll be averaging into these ones that I bought today most likely. The neg calls we average into are up. Well,
to bring the biggest sting when it comes to the financial sector. So we hear from JP Morgan Chase typically first. Again, I see them as kind of the one with the tentacles and the most things and the most visibility. They kind of shock the system. You get your reaction. And then Morgan Stanley typically is the bookend of the big banks, and they sort of, you know, steer their narrative where they would like to. So typically volatility is somewhat muted, all else equal, unless there's something surprising. And so I'm leaning into that a little bit. Selling an iron butterfly, which is effectively selling a straddle here, Tom. Leading it to the downside slightly. Some of the initial reactions post earnings in these names was higher. The stock's a little bit higher today. I know that some of those names did fade into the close of the week last week, but again, initial reaction was higher. And so I think that's sort of the baseline, is that numbers will be okay. If they are to disappoint, maybe there's a little bit more risk to the downside, but $5 wide wings, 275 credit would bring the break evens to 82.25 to the downside, and then 87.75 to the upside. So you have a pretty nice net cast over this stock. It is moderately skewed to the downside. We're not starting perfectly in the middle of that peak. You could certainly shift that around. We just went to this Friday's expiration, so there's tons of strike availability. This one has a little bit of attitude, as Kevin would say. It leads it to the downside, but certainly could be moved around and adjusted to better reflect a different opinion. Risk defined, though, $5 wide spread, net of that 275 credit means $225 in risk.
Yeah, let's look at this one, Kevin. July 21st. monthly cycle that expires in 4 days. Selling the 85 strike call and 85 strike put, buying the 90 call, and then buying the 80 put for this short iron condor. We call it an iron butterfly because it's got that same common strike that you're selling on this. You know, you've got a pretty nice range, but the market's only pricing in about a $2.40 move either way in this name.
Well, that's because a lot of, like Alex said, a lot of the shock from earnings have already come out, right? This is late for the financials, so some of them have already come out, and some of the volatility is probably the bite of these big moves is not going to happen unless you get a complete outlier. But, you know, by definition, the iron butterfly is one strike, right? That's equal. It's in the iron condor family, but it's the same strike. But what Alex did,
and head and shoulders here on the 5 minute.
So
see if it's just consolidating, building some liquidity before a rally, or if we're actually making this intraday head and shoulders still.
He's going to be sitting pretty nice on this. Now the risk is,
or if it's
big moves.
Yeah.
Whenever you're selling,
yeah, we bounce on the shoulder for that handle, rally back up, which would be a VWAP too.
You want it to move far away. So Alex would like a move towards the 85 strike.
Yeah, only expected about that, 2.5%, 3% move in the shares post earnings. And I like that thought press because you used a short-term strikes on this, Alex. You did. But if you're maybe more bullish, maybe sell the 87 strike and then you go $5 out there. So there still is some flexibility with this strategy, right, Alex?
Tons of flexibility, and come to the conclusion. I guess Kevin said it, most succinctly and best. You want, in this particular case, the stock price to be at your short strike. So wherever you feel that Morgan Stanley or any name would be, if you're using this type of strategy, you would want your short strike to be at or as close as possible to that level. I chose 85 on this particular case, but again, that number's really
coin's looking strong still. Wow.
An individual
Upstart,
as long as those strikes are
11%.
Yeah, and the whole idea with this type of strategy is that implied volatility falls, like we
rising up
historically
20%.
see, where you can buy this thing back cheaper if the market's open, liquidity is provided. On this, because the ideal is, hey, it hangs out around 85, you get to keep $275 if it pins there. That's highly unlikely in that scenario, but really short term.
That's an important point, Tom. Sorry to cut you off, but I think that's something to stress is, you can never project a return. You don't know exactly what's going to happen, but you can have a target in mind. And so maybe with something like this, say you want to make $100. If it opens up tomorrow and it's around $1.75. That's a pretty nice, short-term trade. And again, it might need to be perfectly at 70 or at 85 for that, and you might have to wait a little bit. But have a target in mind, have an idea in mind. Do it relative to total reward. Do it relative to your risk. Make it a round number, whatever it may be. Individuals will come up with their own target, but oftentimes having an idea ahead of time of what you'd like to make will help you stick on that strategy if you have the opportunity to take it.
That's a good point, because if you saw the banks on Friday that released, Wells Fargo was higher, fell pretty sharply. Citigroup was basically flat, fell pretty sharply. JP Morgan settled off a highs. So yeah, timing might be of the essence on that type of strategy also, based on the duration. All right. Thanks to Alex Coffey, Senior Equities Contributor here on the network, helping us break down markets, and Morgan Stanley ahead of earnings. Coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Etsy.
Stop looking at me, Swan.
20% so far this year. Nice target today, but still up on the session. Fast Markets coming right back.
11-2 on barbecue. I'm going to bull flag up here. Maybe pull back to VWAP or before it rallies, or maybe not. 35.70. Supply's coming down a bit here. Why would you DRS? Because I'd want to get in and out of it quicker and at the price I want. And if this thing goes back to the NASDAQ, I'd want to sell calls on it. But yeah, if I'm just sitting on shares and plan to hold it long term, very good DRS. If you're not going to sell calls and you're not trying to trade it, you're fine with the headache of doing it and setting it up. $231%. iBorrow still hasn't been updated, so not sure what it'll come out at. Highest 1 hour candle since 421. What do you mean? Not sure what you mean by that. You contact your brokerage and tell them you want to lend them. Yeah, I think it's a smart play. If you're holding shares, like, yeah, collect that borrow fee. You're not doing covered calls. But honestly, 231%. That's I don't know what that would compare with covered calls, but you're getting up there.
In this space, Andy, and you guys, I know you cover happiness levels quite a bit.
And then when the squeeze starts, you want to help initiate it, help push it.
When somebody goes to Etsy, they're looking
recall your
for
shares.
something, in particular. It's a lot of customized type of products here, so you can find something that you'd never thought you wanted or anything. Do you have really good happiness levels for this company still, even though we're starting to see some weakness in the stock?
Yeah, I think there's two factors there. There's the customer side, which Etsy customers are very, very happy and very loyal. I just don't think that they have as much money to spend right now. Then there's the seller side where things are a little bit trickier for the company. We see some.
It's like barbecue's going to break out.
Data, we see some tweets, we see some
from this consolidation.
Posts where people are talking about leaving Etsy. They don't like some of these new, policies in terms of keeping a specific dollar amount or percentage of sales as reserve, which is cutting down on their cash flow. and they're seeing,
Wish is up
opportunity to
7.
go out
First
on their
Solar's up
own,
8 or 7.
via Instagram and other places and sell directly to the customer using Shopify or other platforms. And so I think competition's heating up on the seller side, but from the customer side, people really love Etsy, and for very good reason.
Yeah, it seems like people are still taking those vacations, kind of
New high there on
away from
Upstart.
buying stuff that you don't think you ever need. When you buy something on Etsy, you don't think you ever need it.
But if you think about the point Andy's making here, you can say is the genesis for lower inflation.
Okay, I'm closing my
right?
shorts here.
I mean, prices have to come down because people are spending less and doing less and tightening their wallets, and that's what brings the prices down. So you're basically setting the table for inflation to come down.
Yep. All right, great stuff. Great data as always, Andy. Appreciate it.
New high there on
All right,
barbecue.
that's Andy Swan, co-founder at Likefolio, breaking down the data on
By the way,
Etsy.
I have a chart up of the
Whoa,
one-year chart in
just
Etsy
exploded.
versus the one-year chart in Shopify. Like Andy said,
35
you can see the
cents.
difference. It's pretty
At 35.43.
Yeah, and I think that goes back to Shopify.
You can see it there. Look at that.
Shopify is more based on the merchants than really like Etsy is like a place where you can kind of put all your products out there. Shopify, hey, you can just use Shopify to purchase something on a website instead of using maybe Apple Pay or Google Pay. But Kevin, when you look at this, down 22% so far this year. How do you want to look at this from an example?
Earnings coming out July 26th. Okay. So what I tried to do here, and I was looking at their data and the upgrade from Evercore that they had last week. The stock jumped about 10%. And so what I did, Tom, is I set up for an earnings play now, though. And so what I did, I bought the August 4th 100 call, sold this week's July 21st 100 call. So I did the 100 calendar, 2-week, but at the end of this week, you can roll into the earnings event that comes up on July 26th. So that's the way I'm setting this up. It's a bullish play, obviously, if it moves up towards 100. And if you look at the expected moves, it's right around there. But then at the end of this week, you'll be able to roll into the earnings event and really take that net debit of right around $3 down significantly.
And I don't think the option market's really kind of figured out that maybe there's earnings on the 26th if that's confirmed.
35.30 up 13%.
28th weekly series.
Getting to that resistance.
Elevated, but not like August 4th weekly options are. So that might be a benefit there if you're looking at it in that regard. So let's walk through this example trade. Going out to the August 4th weekly 100 strike calls, buying that one 18 days till expiration, selling in the near term July 21st monthlies that expire in 4 days. That same strike, the 100 call, paying roughly about a $3 debit, so $300 in risk on that.
Brokerage keeps 50% or more.
Here from the risk profile, near 94 on the downside and
that's rough.
Just above 107 on the upside. So while Kevin picked a $100 strike, you still have a nice wide range for this stock to trade in where you can remain profitable on it. That $94 level, that's only about $1.25 above the current share price.
They're allowed to short it whether you lend it or not.
Trade, you've got some assignment risk on
infinite
that short
liquidity
option that expires in 4 days. But Kev, this one's not as cheap as you'd like, maybe on a calendar, but at the same time, it's still defined risk. Right?
And here's the thing, on the Thinkorswim platform, they have the 26th as the earnings date, but it says unconfirmed in that far right column if you look at status. So you might want to be careful because sometimes the option order flow knows better than
and if you're not holding millions and millions of shares, it's negligible.
If I saw that, if I saw
not holding like a
and I saw the August 4th number
percentage
higher,
of the company that you can count to.
My opinion on that,
it's not a fraction.
When I trade it and how I trade it. So you can do one of two things, Tom. You could move that up into the July 28th and make it a 1 weeker, or you can go further out and then roll it into there.
Yeah.
My bounce on view up there a bit.
Company will come out, confirm their earnings on their investor relations page. So you got to keep that in mind also. Unless it gets confirmed, you might have a little bit of wiggle room with as far as an earnings type of date, but a good look at a call calendar to the upside, taking advantage of maybe a grind higher, but still giving yourself a nice wide range for the stock to trade in over the next 2.5 weeks. All right, Kev, let's take a quick break. When we come back, we're going to take a look at Meta Platforms, which is up over 150% so far this year on the back of the tech rally. Part of the Elite 8 is Meta Platforms. Fast Markets coming right back.
Yeah, it looks like this was just might have been some consolidating before we keep climbing up. Kind of right at that resistance on that downtrend on SPY. Might be getting some calls here. Barbecue 35.52, up 13.8. I'm not expecting a merger or dividend. It'd be fun to have the power to recall your shares and then scramble for them. Love to see the stock moving. And you can say, I'm Michael Burry. %, on Upstart. AI's up 7. Ubo 7. Paysafe's up 7.5. Wow. Drops up 5. I almost did cash good puts back in on them today, but well, not sure about this chart. $35.72 on barbecue. %14.5%. Those run calls are up 15%. Wow. $35.85. Melting up.
Some of the lift we were talking about there to the $77 level came amidst that weaker dollar that we saw, right down to 15-month lows, and kind of odd to see the indices higher today with crude lower, which ties back to, I think, what we're seeing as far as some of the demand and unease about China. Those numbers this morning still weighing on crude. Again, while the indices managed to shrug it off here, you can see WTI, the Brent down 1.5%. very much range bound, but again, oddly enough, down 1.5% while the indices are strong, higher on the day. There you can see energies across the board. The Brent at 78, coming off that $80 level, so a bit of a retreat off the highs from last week, but still, relatively contained and range bound there.
Ben, real quick, when you look at what's going on right now with crude oil, what's going on with copper and its relationship, China data this morning kind of dominated the
You'd buy more here? I'd be selling if I had any more shares left.
When you look at it, what else? What else should we be looking at?
I'm selling some here and selling some at 38.79.
Other metals like gold. Should we be looking at grain prices? Should we be looking
I'll buy
at
back
wheat,
in once these become support.
Which had news out. I think all the we're getting into a key area here for grain prices, as you know, Ben. What else do we look at? Remember, summer is when grains and these other markets should take over some of our interest.
Absolutely, and all these products, Kevin, tie directly into the inflation narrative in terms of the Fed's initiative to try and combat inflation. And so I think if you're talking about the metals specifically this week, I'd look to a couple of those housing numbers that we have, right? Because it ties somewhat into copper. Obviously, there's a lot of focus on electrification and the impact that has on gold and
I'm
silver.
so slow on Webull.
The weaker dollar is going to be a factor to consider also. But yeah, I'd have to definitely tie
I got some daily calls.
The crude to the China.
So slow.
There. Also, though, in terms of grains, Kevin, you did mention there's some activity going on there. A nice strong run up in wheat, corn, beans. It looks like we've pulled off the highs from earlier today, but a nice run up earlier amidst some of the concerns associated with Russia.
Why did it give me a
pulling out
sound?
of that grain deal and no longer extending it. So lots to focus on, but some of the intraday volatility we've seen, again, I think step back from that, focus on the bigger picture and the impact that this all has on the inflation narrative. And tying back to what we were just talking about in terms of crude, all of these products right now still relatively contained and range bound. Intraday opportunity with some of the spikes and the volatility we've seen on the more granular time frame, but longer term, these have not necessarily agitated or sort of resurfaced some of those inflation concerns.
Yeah, I'm curious about the health of the economy and the consumer at this point, Ben. If that was part of the reason we saw crude oil catch a little bit of a bid late last week before failing once again at that 200-day moving average. We'll continue to watch that. All right, thanks to Ben Lichtenstein. He's the host of the
Lichtenstein
on the network. But Kev, let's take a look at Meta. Shares are up, 156% this year. Yeah. I mean, it's like every day it goes up on those percentages. Look, not completely overbought, I guess. It's getting up there. But this is a name. It seems like all these analysts over the last several weeks and last couple of months have all reset expectations because the headwinds that were there, right? Apple changing their privacy rules, currency headwinds due to the dollar rising. This is a company that relies on a lower dollar. And then ad spend isn't as bad as people had predicted it was going to be this year.
And let's face it, Mark Zuckerberg was stubborn.
Yeah.
He didn't lay off people. He wouldn't stop spending on the metaverse. He was kind of, he was kind of aloof to the overall macroeconomic world that we find ourselves in. All of a sudden he woke up. And, it's interesting. The key to looking at Meta right now is not look at the one-year chart. The one-year chart looks
I don't care how. I'd have to short it to sell more. And I don't want to short it.
But if you go to the 3-year chart, it looks like
a you're welcome,
V
Trace.
recovery on this name. So it's not cheap anymore.
No.
It's almost a 38 PE now. So they're going to have to do something. But Threads might do something for them. Here's why Threads are important. I think while this flux is going on with Twitter, I think it was
I know eyebrows not showing up still.
time to get into this.
Probably will be 200% or more.
I think their
refreshes
ability to seamlessly do this is pretty easy. He's not inventing anything. So the whole street advertisers understand what it is. All I did was copy something, right? Yeah. They're good at that. Mm-hmm. They've done that in the past. So there's a lot of good things, but the problem is the stock's not cheap anymore.
Yeah, and we had price target hikes out of Goldman Sachs up to 335 from 300. JMP Securities jacked it up to 3.
Got a nice head and shoulders on the yen.
And then Credit Suisse, who was low
on
at
the
277,
hourly.
jacked their price target up to 361, based on a lot of what we're seeing out there. The resetting of this stock. You know what? My prediction is, Kev, when they report earnings on the next earnings call, he might say metaverse once or twice, and that's it. Because the less he says,
well, he's got a new topic now. He can talk about threads.
And I think the monetization of Reels, I think, is going to be really key for this company.
Well, they need to monetize all of it, right? As much as possible. Reels has been a drag because it's hard to monetize.
Right, and it seems like the algorithms that TikTok uses, that competitor in that space, may be a lot better than what Reels is.
There we go. List buy.
There's still.
I got long on the futures there too when I went long on the calls.
They would be a big winner for there. So it's Snapchat though. So it's Snapchat.
I only got 2 calls, so I meant to get more, but I didn't know what my buying power was.
Basically just
oh well, just more just building good habits.
He's got that,
trying to make big profits at this point.
The average users, the monthly average users, that's so big. Why wouldn't you keep throwing things at them?
Yeah, what was it? 2.99 billion Facebook monthly active users on just that platform alone. So they've got the eyeballs.
Is no one selling barbecue up here?
That's what the advertisers gravitate to. But I looked at a strategy here, Kev, that kind of maybe takes advantage of just
from Hot Wheels
week on Thursday.
Thanks, Trace. I think I already have one of those though.
316.
Really dickish of you, but appreciate it, man.
Needed, because the RSI right now about 71, so overbought on a technical basis. When
told you, I'll buy it if it gets higher.
70, it's considered.
I will buy if we go higher. Absolutely.
Go up to 80, go up to 90. We've seen names
up here.
do that too. So
buy it up here.
Strategy, Kev, that maybe takes advantage of if the stock does continue to kind of
there you go, breaking out there. 30.
You benefit
36.25.
You're still safe on this type of
We're getting into that resistance zone.
I looked at call butterfly here, Kev, where I'm going to buy one of the July 21st weeklies, only 4 days till expiration. Buy one of the 312.
I'll ride it from. I'll take the ride from 40 to 50 or whatever, 60 wherever that is. The gap fills at like 60.
So basically, in essence, you're buying one $2.50 wide call vertical, selling one $5 wide. That compromises this trade. But because we unbalanced, you can see from the risk profile. If I'm collecting,
I don't want to take this ride right through resistance though.
Break even up to 317.80, and anything above there, Kev, is where I'm going to have.
But the handle, it's playing out.
About $220.
The handle is just very slow.
Above 320. Your thoughts here on the
with
unbalanced
big volatility wicks down there on the bankruptcy court hearing days.
316 again. It's a nice trade over the next 4 days.
This is basically a bullish play with short deltas that gets hurt if it's too much of a move on the upside. But it's a bullish play, like you're looking when you want it to go to 315.
Buy at 420.
Be your optimal place, but you
okay, I'll buy one share there for you too.
Why? Well, you've got a $2.50 wide long call spread and a $5 short, which gives you a credit of around 40 cents. So on the downside, everything would go to zero. You make your 40 cents.
Right. Yeah. And I think that's a thought process. Everybody looks at a strategy like this, Kevin, goes, oh, well, this isn't a bearish strategy. It's not a bullish strategy. It's just kind of like a grind higher type of strategy, right? Where you get that kicker at or near that short 315 strike, right?
Yeah, exactly. So this is kind of an incongruous spread, right? You want it to go up, but not too far.
Yes.
You know, you're short deltas, and you don't mind if it goes down, but you'd prefer it maxes out on the upside.
Yeah, and the fact
no
that
ace, 16.35%.
Yeah. Look at your duration on something like this. If Meta keeps going up 1 or 2% a day, gets up to that 315, 316. That's the whole goal of this type of strategy. You just don't want it to explode after this massive run that we've seen. Kev, we got 1 more minute left, but I want to kind of get into a discussion on the overall market, the grind higher, the Goldilocks scenario that's playing out. But there's still warning signs out there because we've got a lot of earnings this week.
Retail sales tomorrow morning will be a good one for the overall market.
Where are the shills?
We've done airlines.
I'm the biggest shill here, I think.
That's not a good sample size. For
BBYG up 9%.
We're creeping closer to the mega cap tech, and that's where things.
Oh yeah, BBYG still looks good.
Pepsi reported earnings on Thursday.
They got
downgraded. Downgraded today.
Options on here too.
Consumers' habits are changing a little bit. Their costs are still elevated at this point. So fully valued is what the analyst said on Pepsi. But it's going to be an interesting week. Hopefully we get some pickup and some action because today's
it's a pretty big spread on here though.
But, yeah, that's going to wrap up.
I like BBYG. Looks good.
Next Gen Investing's coming up.
Next Gen Investing. 36.40. 36.40 on barbecue, up 16.25%. See if SPY can break out of this cup and handle, or if it's going to just retest the resistance and put us in a chop. I'll hold my calls for now. Upstart's 13.5%. That is neat. 5 green days in a row. Okay, everything's different on OTC. Yeah, today would be the 4th green day. High on barbecue, 36.50. It's up almost 17%. Almost. They would be the 5th? We're getting close to some of your guys' cost basis, aren't we? I see one. I see that as a red candle. 7-Eleven. Today's the 4th on my chart. Yeah, I think around 40 cents is some of your guys' cost basis. Some of you that didn't just buy in the last couple months. Just been averaging down. The retrace got us. Patience. It's either a retrace or getting rejection up here. One-on-one on barbecue. That's right, Mo Lava. Bull flag on the 30-minute. Yeah, right here. Broke out. Don't want to close my calls. Maybe should though. $35.62. Barbecue came down a little bit. It's up 14%. Got VWAP at 33.97. This whole area is a resistance. 35.70 up to 36.40. Really all the way up to 38.79. Say, be a profit taking area. Or a buying area if you're an idiot. Jenny Steves, man, she got her highlighter jacket on.
Of course, looking forward to that discussion with Jeff
dope.
Pierce at the end of the show. Always fun to discuss Palantir.
It's like an ice cream treat.
Company and sort of the world that it's operating in. Rick always lets us know too that name, somewhat ominous from Lord of the Rings as well. Tesla. Of course, we got to talk Tesla this week with earnings and all the news. So excited for that as well. But let's do up vote, down vote, not endorsements, not recommendations. There's really nothing tying these names together, Jenny. So we're not gonna, have the fortunate choice of kind of a theme here. We're just gonna narrow them down. There's no wrong answer here. These are all really, really popular names from a trading standpoint. They're all doing quite well today. In some ways, they have almost more in common than they have differences, even though they're not in any way, shape, or form in any of the same businesses.
Absolutely. I'd say the only tag I can make to all of these names is they're all getting somewhat positive analyst remarks today. We'll start things off here with Chewy, which is making the most modest move to the upside, pretty much unchanged on the session now, with Goldman Sachs upgrading shares to buy from neutral with a raised price target of $47 from $39. Obviously implying about $9 of upside from where we're currently trading. But Goldman did say in its upgrade that it sees the potential for continued positive net sales growth and rising gross margins. The analyst sees a more positive risk and reward skew at current levels, and it is increasingly more positive on Chewy's ability to maintain this 10% plus sales growth from 2023 all the way through 2027.
It was me.
Chewy has the potential for steady margin expansion over the next 5 years as it scales private label and healthcare segments at high margins. This name is relatively, I would say, quiet on the year. It's only up about 2.5%. It's down about 28% from its 52-week high and up about 31% from its low. So a name that has been somewhat lackluster in terms of its price activity. We do hear their earnings not until the end of August, so we do have some time before that catalyst. And Alex, we've discussed this name as we're both pet owners, the way that unfortunately this is a consumer staple in your life. You have to pay for your pet food and pet needs and medical expenses, which can rack up quite
Whoa,
high.
sorry.
This
Sorry.
has not benefited from that stability
Sun went up
that many
10%.
analysts would have called for this year at all.
This name in some ways is a victim of its own
Lime, baby.
throughout time. So much increase in kind of pet ownership during the pandemic timeframe led to a tremendous explosion in growth to the upside for this company, particularly around the pandemic too, when e-commerce was dominating consumer activity. There's so many things went right for Chewy all at the same time. You saw tremendous upside in the stock. And like so many names, so many come to mind around this time. PayPal, Square, really any name in tech seemingly had this sort of giant upswing, and then the downswing kind of back to where it was as normalization kind of took hold. The thing about Chewy, and we said this the other week, we were talking about Toast, the company that specializes in hospitality and payment services with George. When you go into an industry that is somewhat established, the only real way to disrupt that industry is to do something very, very well. And this is a company that really leads on its customer service. I still get
another level break
notes,
here for a run.
There's like 20 million customers for my pet's birthday. That's just effort, and that's something that Amazon doesn't do. Amazon might be able to get an order of Pro V1 golf balls at the same time as pet food, but I'm not getting a handwritten note. And so you go on Chewy because you trust it. And now that they're moving into things like healthcare for pets, that trust is going to go a long way.
Yeah, I mean, the handwritten notes are unbelievable. It's actually the best way for me to remember my own pet's birthdays because I never remember, but Chewy always sends me a card or sends my pets a card, which is wonderful customer
There you go,
service.
Spy.
Really top-of-the-line customer service from Chewy. But our next name
Spy on the
today
Breakout.
is Take-Two Interactive, which is seeing a nice move higher today.
Oh,
and Bank of
wow.
America only fueling some of this momentum
Like,
today with a
stop
buy
loss
rating,
Hunter.
raising its price
Stop me
target
out on
of
my
stock
futures
from
with that
170 to 100
crazy
from
candle.
146. Highlighting that Take-Two is rolling out one of the largest PC
That was
and
crazy.
console game pipelines in the
Oh.
history of video games,
That sucked.
as they do see this giving each
All my
tens
options.
of millions of fans and sales spanning across multiple console generations, as well as PCs with the addition
Heck
of
was that?
Zynga, which they acquired back in May of 2022, and potentially mobile phones. Therefore, the firm does see Take-Two now as very well positioned in the overall video game space, a name that is our second best performer of these four names off the top of the show on a year-to-date basis, up 46% this year, up a nice 3% this month, and up 69% from its 52-week low.
It really helps to have one of the most successful franchises of all time in video games under your umbrella, and they have that with GTA. The hype around the release of that game, which has so many potential kind of long-term monetization for players, is obviously going to be a huge part of this excitement and this story. But something that kind of ties again all of these names together is their sort of perception of quality. We just talked about that with Chewy, sort of its quality of customer service maybe over something like Amazon. I think the same maybe goes for a company like Take-Two. Maybe they don't have quite as many releases
Spy's
as
coming back
peers,
down here.
like
Dang, man.
Activision or EA. But it seems that when they do release
Someone
a game,
talking today?
It gets a lot of attention, and it's at this perception of quality, particularly the Grand Theft Auto line. So I think it's really been an impressive name. I think it's a fascinating story, and we'll see ultimately what happens when the GTA, I think it is 6th, comes out, if it lives up to the hype or not. Next one on the list is Baidu. These Chinese names just used to dominate the conversation. And now that they're actually doing kind of okay, relatively, they don't seem like they're ever in the news.
No, they're not. I was thinking the exact same thing. We haven't discussed Baidu in quite some time. These names were trading at one point with such velocity, and they've since fallen out of favor, although this name faring quite well on a year-to-date basis. It is up 30% this year and up 9% this month, so seeing some degree of a comeback. And Goldman Sachs today added Baidu to its conviction buy list, saying it's a top AI beneficiary. They view Baidu as one of the best-positioned China internet names pivoting to secular generative AI, with its expanding AI product suite backed by 4 layers of generative AI service offerings. Now, they also did raise their price target to $197 a share from $183, which would imply about 30% of upside from where we closed on Friday. The analyst did say that in the second half of this year, Baidu is on track for steady search advertising recovery due to its high exposure to offline small business merchants, with the potential upside from operating leverage. Their bull case actually supports 62% further upside in Baidu shares, but they said that with Baidu earnings remaining on an upward revision, they see more room for valuation multiple expansion, supported by a lineup of upward catalysts. So nothing but positivity out of Goldman today on Baidu, a name like we've discussed. I don't want to discount the fact that it is up 30% year to date, but the slow and painful recovery of China's economy has been one I think that's dampened a lot of this enthusiasm around some of these Chinese names.
Yeah, and of course, when you come to a discussion around a name like Baidu, obviously it's struggled around the pandemic, had a huge...
Spy makes a little inverse head and shoulders here now with this resistance.
So much of
Got a head and a shoulder.
Well, but it struggled, and the trough from the fall was so much more, sustained, and it began, almost a year before we saw it in the U.S. as, these Chinese names started selling off at the beginning of 2021. We didn't see the peak in U.S. names till like November of 2021. There's just a lot of ground to be made back up, but it is back at least to levels that we saw right before the pandemic. I know that there was sell-offs leading into it, and it wasn't near its
Seems like that might be the case.
We kind of found that
Got our handle.
January,
Came up,
February,
retested.
March of 2020.
A little head and shoulders inverse.
Some signs of optimism.
Break.
Obviously, the analyst excited about this one at Goldman as well.
Barbecue hanging out, 1471.
One that is sort of seen as the Alphabet's Chinese counterpart, and I again used to talk about this name all the time, and very rarely do we discuss it now. So always fun to get to chat about some of these names like Baidu. Next one is Chipotle. Again, coming down to the perception of quality. I mean, I can't think of a name that is scaled the way that Chipotle has, and see maybe Lululemon. But other than those two names that have become more mainstream,
just a stop on. That was crazy.
That haven't lost that perception of quality. At least I haven't noticed the perception of quality change.
I completely agree. And I had Chipotle over
no
the
news,
weekend,
no.
and I was surprised. We talk about the price increases that they've had to encounter, as well as so many other companies. I have to say that all things considered, it's still a relatively low-cost meal, especially because I actually went to a physical Chipotle and did not pay for delivery, which I was thinking I was getting a steal. But we're seeing analysts today just further love this name. Oppenheimer
Wish is up 8. Barbecue looks like he wants to move back to VWAP.
From just around $2,050. The analysts did say after refreshing their analysis and reassessing their Chipotle thesis, they believe the near-term and long-term
Wish looks nice too, man.
versus consensus remains too
What's the other one?
attractive. Now this name
of BBIG.
Analysts covering it.
Yeah, Wish and BBIG look good.
Holds, no underperforms, no sells. The average price target is slightly above where we're currently trading, but modestly. This name trades with such a high price tag, though. There's always that to consider. But shares are up nicely today, up about 2.6%. And this name also does have earnings. Their second quarter earnings expected next Wednesday, July 26th, after the closing bell. So they are one of the more near-term names to keep on our radar here of the group. And the best performer of these four on a year-to-date basis, up over 50%.
I was going to say that might be the only thing to,
okay,
to really
close those calls.
This
Small profit.
from the others, and why it may
I'll play the futures if we get the breakout here.
This bucket is this name's been on a tear.
Wait for breakout retest.
All-time high, seemingly always with Chipotle. It's been a tough name for bears to bet against as it just continues to chart to new heights, and this year no different as well. Every time it seems like they face a hurdle, they have overcome it, at least in recent years. But let's narrow it down, Jenny. I mean, again, there's no wrong choice. We got Chewy, we got Take-Two, Baidu, Chipotle. You mentioned Chipotle earnings super short term. Maybe that's a disqualifier, but again, there's no wrong answer.
Yeah, I have a feeling we'll be revisiting Chipotle closer to their earnings events. So for the sake of, we were just so into the pet conversation, we'll dive more into Chewy, as that name has been somewhat lackluster this year. And then another name that's been actually fairly disappointing over the more long-term, Baidu. We'll discuss more on the Chinese landscape in terms of the technicals and what we can expect going forward from Baidu. We'll be looking at
Even though we got the chart and kind of nailed the move, it's just small moves today on the SPY. It's just pretty tight range. Wasn't a whole lot of good entries here. Had little head and shoulders here. Played down to VWAP. We did that. Played the bounce. But by the time you get confirmation, it's just not a huge move. Unless we get a breakout. Today the market's just waiting on the earnings. 4 hops. 35.90. 15%. Yeah, little stop hunt. So I'm in a quarter on run. BBIG 9. Got Zoom up 3%. Looking good though. Like that breakout on Zoom. One more level to go. Snap. Oh yeah, Snap just woke up. I think they have earnings pretty soon here. They're usually one of the first ones. Earnings season. 7:25 next Tuesday. Yeah, the chart looks nice. Looks like we get a little pre-earnings run up. Probably a good one to trade, actually. Get some calls. Sell some before earnings. Make them free, maybe. Heavy's kind of high. A long accumulation looks like on Snap. Be set up for a large move. Totally forgot about Snap. Nice. Yeah, I put an order out. See, just a little starter. The chart looks like it could make a big move with earnings. Start wanting to go. There's new high on Upstart. 54.15 is our high there. Our resistance. Yeah, 14% on barbecue. 14% on Upstart. 14.5. Barbecue 15.5. You were looking at Upstart though. That wasn't barbecue. AC transfer agent for barbecue just got a cease and desist? What? Shut up. Do you have a source for that? What does that even mean though? What's the implication of that? Firm's up 6.5. Carvana. Got filled on some Snap. On a Snap call. I just got one for now. I got let's see. August 15 call. High coming down there. Different AST. Okay. I'm like, what does that even? What would that even imply?
Gap up as well. So 35 would be a key level to the downside to hold.
35, and as we speak, we're seeing shares slip a little bit here in real time, Rick. So I think it's interesting the fact that shares have risen almost 30% from their last earnings event. Like you said, we do have some time until their next earning, not until the end of August. But continuing momentum starting to weaken here in a name that's underperforming the overall market strength today. So with this in mind, Alex, and just considering the fact that, well, the technicals don't exactly look super promising in Chewy, we do see this analyst out of Goldman today with a $47 price target and lots to look forward to from their perspective on Chewy. So walk us through then a more optimistic, more bullish leading example trade.
Yeah, and sort of marrying it with sort of the tactical uncertainty, I looked at a neutral to bullish strategy, Jenny, in order to allow for some cushion here in the event that some of these optimistic moves don't actually take place in a short period of time. So we looked at selling a put vertical below the market going out to August. The 35, 32 and a half strikes are the ones that we selected, in which we're selling the 35, buying the 32 and a half. If we're able to collect a credit of 50 cents, that'd be $50 in maximum possible profit, $200 in maximum possible loss or risk. That break even, you simply take that 50 cents away from 35, you get to 34.50, and again, neutral to bullish. We take a look at the risk profile, one that we looked at countless times. Don't even begin to guess how many times across our programming throughout the years, but the short put vertical elongated Z risk profile, in which the risk and reward are both defined. And of course, we start in that max profitability zone. So we start above 35. And so if all else were to stay the same except time passing, that would be in that max profitability zone. Of course, the risk is to the downside. It's a 4-to-1 risk reward ratio. $200 in risk to make 50. Break even, of course, on that was illustrated by that white arrow there at 34.50. But this is one, Jenny, that's just asking Chewy, or a name like it, if you were looking at this strategy on a different type of a name, to just hold on to its current value and stay above the short strike. So in this case, when you have a stock like Chewy that is trading for in
hard to see on this ETF, but here's the head and shoulders.
You got about
much easier to see on the futures.
To the downside to get to that 35 strike.
Yeah, now to shift gears here to a completely different name. We're looking at Baidu, although the closest comparison I can make to these two names is this name is also giving up its strength in real time. So
tell me why else to not get involved with EPS.
Call for 32% upside in shares. Obviously, that's a 12-month
wink,
price
wink.
target. But walk us through your thinking, because I was looking at this name just thinking, gosh, some of these Chinese ADRs are so unexciting on a year-to-date basis.
Unexciting.
It is up 30% year-to-date.
And really, it's more than doubled from its yearly lows. So there's been some low-key excitement, I guess you could say. In
the run calls are up 25%.
More recently, we've been trending upward in a channel-type shape here that's taken us above all three of our exponential moving averages that we follow. The moving averages themselves have the faster ones have crossed above the slower ones. They're diverging apart from each other to the
Chart
upside.
masters.
The trend is still strengthening here. We're not seeing much of a slowdown in this upward price action here. And we are still making new relative highs over our previous highs. But we haven't cracked a key area yet here. We haven't broken above the 160 level. That's about where price topped out here and here. 161, 160, that's the place to be watching to the upside. And we're not that far away from there, really. We're, we're about 7.3% or so below that point now. So, that could happen for sure. Not saying it will. No guarantees in anything in this game, but we're a stone's throw away, I guess you could say. So, looking at our RSI, though, more bearish divergence here. Price was making new closing highs. Well, the RSI, our measure of momentum, was trending downward there. Not really what you'd want to see. We are still in the bullish side of the indicator here, so things are still tilted toward the upside, but you'd want to see a break beyond this trend line and for price to make some new highs as well for the uptrend to be secure. So we also broke above our volume profile point of control. We can see that much of the trading is concentrated between about 130 to 143 or so here. We're moving out of the heavy trading areas into lighter trading areas here. We're just on the edge of that value area. These two thick yellow lines on our volume profile study encompass where 70% of the trading has taken place during our time period. So we're moving from a heavy trading area to a lighter trading area. So that means we could be in for whippy prices, fast-moving prices here. Not a lot of clear nodes to help us provide some support or resistance as we get into these elevated levels here. Looking at our chart a little more closely, we can see that to the upside, like I said, the 160 level, that's the site of our double top. That's the point to beat to the upside, 160. To the downside, we've got a confluence here. We've got our yellow 21-day EMA roughly in line with our trend line, coming in around the 142, 143 area, closer to 143 really. Then to the downside below that, we've got our two longer-term moving averages, orange 63-day, purple 252-day, and our volume profile point of control, all coming in around 134 to 137. So that could be a rather sticky area to get through if we start to really fall apart and move upward.
Okay, so another name that is looking somewhat directionless here, although like you've said, it has nearly doubled off of those lows, so important to not discount that, and I will look at this name a little bit more optimistically for that reason, Rick, but we will leave it there. Appreciate all of the technicals as always. Rick Ducat, our chart master. So now, when trading this name, Alex, obviously a completely different beast than Chewy, but the analysts still feel pretty positively about this name and see this to be a big winner in the AI space, I'm assuming with their Ernie bot. So walk us through then a more bullish leaning example trade again, leading into the fact that this name has been still an outperformer on a year-to-date basis.
No doubt optimism still there as well. And so say you saw that area that Rick had talked about at that 160 level to the upside, and you were looking
still have his inverse head and shoulders kind of.
Level. I have a strategy that would look to benefit from that exact outcome. Looking at a call calendar in which we're selling the first week
It's
in
kind of
August,
falling apart
buying
actually.
the August monthly cycle 160 calls for a $2 debit. This is a strategy that has $200 in risk. You get that from the $2 debit, of course, but benefits greatest from a move right to that strike level. And so in this case, that resistance level hugs that 160 line. And so if you get a test of the resistance, maybe even if it were to ultimately break through, or of course it could get rejected at that level, it would have at least gotten there for a moment, and that would be the best case scenario for this strategy. And so you can see it can overshoot to the upside. It could of course underperform to the downside as well, but a move right to that strike is the best case scenario. So for an investor or trader at home who maybe would be looking at Baidu or really any other name, but be considering a time spread or a calendar spread, the strike selection is very, very important. It's important to be precise.
You bought it right here, Macaron?
And make sure it reflects
Hope you bought like one share.
You believe in that time frame
Kidding.
That this stock could go. So
The odds ever be in your favor.
60, we found that from that resistance level that Rick had talked about. But again, someone with a different outlook may choose a different strike. It's highly customizable, and to me, that is always one of the more important pieces when it comes to the calendar spread, is just how customizable it can be to an individual investor's outlook or projections for what may happen.
As always, and another name that another example trade that we discuss very frequently on this show, but also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risks like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are discussing the autos, but namely Tesla, finally unveiling that long-awaited Cybertruck after 4 years. We will discuss more on why that's propelling shares higher and why this is good news for Tesla as a whole coming up next.
Yeah, now I kind of want to see a break of the high of the day to go long. Breaking the high and a retest, since it looks like it's just chopping. One of 3 buys today. Okay. Highest 4-hour candle close since 418. Hey, that's a good stat. Got all the hot stats on barbecue charts.
Significant price cuts for all versions of their electric F-150. That's the Lightning pickup, which, by the way, on my early morning walk this morning, I saw one parked on the street.
Or
Jenny,
propane
it
if
was
controls
sweet.
considered
I
bad.
looked, and it's a head
I like
turner,
the
to say the least.
coal.
The truck is smooth looking. Now, the only thing I don't like about the Fords is
And
the
charcoal,
interior
or and
of the vehicle
propane.
is still kind of, it's not
Like 'em
very
both.
luxurious, let's just say that. But the cheapest version of the Lightning is now going to be about $50,000. That's roughly a $10,000 price cut. All versions are going to see at least a $6,000 price cut. Ford is boosting production this fall. If you remember, though, this truck debuted. It was around a $40,000 truck. They had to increase the price several times to $60,000 back in March. This came after, well, some of the metals that were acquired and minerals ultimately, and the production of the vehicle prices increased. So they've now been able to upgrade, as I mentioned, some of the output. They're going to triple it by this fall, and Ford's scheduled to report second quarter earnings on July 27th. We did take a look at some of the intraday price activity. I'm not sure if it's the price cuts, if it's the Tesla news, but price has been coming under pressure and potentially breaking down at a key area here. I'm excited to talk about the charts and what I'm seeing there as well, Jenny.
You know, Ben, they're no Subarus, so you can't compare. I know you're a Subaru guy.
What?
But now, in terms of the technicals, like you were just saying, I mean, this name, Alex and I joke that it's perpetually at around $14, $15, and hilariously enough, even with this 5% move to the downside today, it's still at $14.
Yeah, well, with Subaru, you get everything, the full package, right? The outside, the interior as well is quite comfortable, but I was a Subaru guy, Jenny. We won't get into the details of that story right now on the show here. Let's dive into the charts here. Some of the weakness we're seeing, the 5-minute time frame. You know I look for these areas of consolidation, migration of value, as I like to call it. In this instance, it has been to the downside. You can see about every 10 or 20 cents, the market kind of pauses, takes a bit of a breather, and then resumes that trend that we've seen where you get a vertical breakout to the downside, resumption of sideways horizontal consolidation, a value area that forms, and stepping away from the 5-minute candles, the more intraday time frame. You can see the move lower that we just looked at is somewhat counter trend, and it has us right back to a key area. This $14.20 level is the line in the sand in many ways. I think, again, if your working assumption is that we're seeing value move at higher and higher levels, well, then you should assume that that's going to
Ron is still running 12%. Look at that climb.
At some point, you have to kind of revisit that thought process. If you were to see value form at a higher level, it would have been above this $15 level. You can see the reversal threatening the most recent area consolidation, which is kind of, again, that line in the sand. Now, I did want to point out where we were in terms of looking at, again, bigger picture. You can see how Ford has really struggled since the highs from earlier last year, and you can see how we just recently tried to get up above resistance from fall of 2022 and the beginning of this year, up around that $15 level, back down below it on the news here today, a gap lower, and failing to get up above the high from August of last year. Lastly, taking a look at where we are relative to the 50, the 200-day moving average, the bulls can kind of hang their hat on the fact that we're still above those two closely watched levels. But look at RSI here. It's rolled over quite a bit here, signaling some strength to the downside, energy, and we're definitely seeing that again on the more intraday basis as well.
Right, but we're seeing this weakness really throughout the auto names, not even just Ford today, as a result of, you know, some of this Tesla news. Tesla's still continuing to be higher on the session, but these names just not able to compete with Tesla. And I have no opinion in the matter because I am carless. So I support all the Subarus, the F-150s, the Cybertrucks. I support them all. But we will leave it there. Appreciate all of the insight. Ben Lichtenstein, the host of Future.
Lichtenstein.
I'd like to bring back in Alex, and it's time for FOMO. So naturally, we are talking all things Tesla Cybertruck.
Inverse head and shoulder zone, Pac West.
2019. We finally got some updates over the weekend.
Yeah, I'm going to tie this into the story that you and Ben were just talking about with Ford.
What's IP doing?
The Ford
Down 1.25.
Lightning. It's very cool, but, and this is the key thing that it always had a question mark for me around it, is those who buy pickups oftentimes are buying it for a work reason. Maybe they're towing something. They're typically seen as more durable vehicles, lots of miles potential on sort of the traditional vehicle. But it's really, they need to be powerful. They need to be able to, go a long ways. They need to be able to pull something heavy. I'm not sure the electric motor gets that done. And I'm also not sure that the target demographic really aligns. And so I've always had that question mark with the F-150 outside of
Arch points
the
up
initial
6%.
of it being, this
Would
first
have been a nice one yesterday.
pickup truck. Rivian, of course, you see one, they're a cool vehicle, but it's not the one that you'd expect to be, pulling a trailer or towing something, very, very impressive. It's just a cool vehicle. And so that's
Go up
where this ties
6.8.
into Tesla, which is, I think the Cybertruck
Firm
looks
up
awesome. It's like a
6.8.
military grade vehicle. I don't know what it can't do.
Wayfarer's had a rally up 3.5.
Who's buying this? Or is it just look what we can do to showcase it? And that's always been the basically the entire
Cheers to
goal,
shorting
which is
barbecues. Are coming
we
down.
have all this technology. Here's this vehicle to showcase it. But this isn't going to be a mainstream product. I don't expect to be walking around.
I think it's a good idea to lend your shares though.
Around downtown Chicago.
No, I think
That borrow fee, the fact that you can't do covered calls,
that demand, I actually have great numbers ready
and
for
you
that.
don't get.
So we did see by the end of 2019, they did have.
You don't lose your shares like you could with covered calls theoretically.
And then by the end of last year, they had grown to about 1.5
If you're just
million
holding it,
reservations.
not trading it.
That's ridiculous to me. So there is definitely a market and definitely a strong demand. But from a production standpoint, Alex, you're absolutely right. This will not be the same as, say, their Model 3 or their Model S or X. They are expecting around 10,000 units to be produced this year, and then 100,000 units is expected by 2024. So that's a pretty significant ramp. Elon Musk has been fairly transparent about the fact that they're going to see some slowed growth, with the fact that this being introduced to their assembly line will then obviously sort of delay things in some capacity, but they've got to make some pretty sizable figures, because it's one thing to unveil.
I'm the biggest shill in here, I told you.
It's about it that the employees in the Austin factory look very happy. It's another thing to now make this pretty exceptional target for the Cybertruck production. I can't wait to see one of these in real life, because we've talked about this for 4 years. I've never actually seen one remotely close in person. So that to me is the next exciting leg of this. But I do know that right now when operating Tesla, we do have their earnings this week. It's Wednesday after the closing bell. Margins are
10.4% on BBIG.
that some of their growth in China is a concern. Cybertruck sort of falls to the wayside in terms of their second quarter picture, but I definitely think this is being read as like a finally we got some at least headlines, some updates on that Cybertruck, because it has been an ongoing conversation. Tesla, of course, though, making a nice move higher today, has slipped a little bit, but still up about 1.8%. It's up 132% this year, up 9% this month, and up 181% off its 52-week lows. But a theme that's been discussed throughout the network today is some of these names that are at their all-time highs, or names that have just clawed back. Tesla, nowhere near its all-time high. So I think that's important to note, that even with this phenomenal year they're having, we are just clawing back losses we saw made really at the beginning of 2023, end of 2022.
Still a $900 billion market cap, though. And for context, we were discussing Ford. I'll give you Ford's market cap, $56 billion. So, I mean, the multiple is insane in terms of comparison. But, you know, what I'm looking forward to is I want to be calling an Uber one day, and it's the Cybertruck that picks me up. That is going to be exciting the day if that ever happens. But from a trading standpoint, I have to wonder, you know, why the timing of this news? You got earnings on Wednesday. Is this to kind of go for the double optimism, you know, jump on the Cybertruck news, jump on a positive story? Or is this to build a little bit of cushion because there may be something disappointment? Never really know, and of course we won't know the answer to that until after it's too late. But I always wonder that whenever these news items are sort of seemingly intentionally released at a separate time that's awfully close to those earnings announcements. But from a trading standpoint, Jenny, I did look at a bullish strategy, one that is very short term around this earnings event, but also one that is risk defined and relatively small given the fact that Tesla is nearly a $300 stock, and it's actually a strategy that would benefit from a move right to about $300 a share in Tesla. And so we're looking at buying a call condor, just going out to this week, buying the 285, selling the 290, and then of course selling the 300, 302 and a half strikes. All of this done for a $1.50 debit would lead to $150 in risk on a max possible gain of 350 bucks. It can overshoot to the upside, and in that case, if that were to happen, that 350 would stand to give back about 250 of that, and it would level off for a $100 profit. If we look at the risk profile, it'll illustrate that. Break even 286.50 is basically perfectly in line with the current share price. And in a name like Tesla, it's quite hard to do because this thing can move, you know, $1 in a second, it seems like sometimes. So looking at this here, you can see how it performs. There's a window between 290 and 300 where this thing can expand to 350, but it does take no upside risk. So looking for a little bit of upside around this earnings event this week. That would be kind of the wheelhouse where this one does best, between 290 and 300.
And of course, we did already get their second quarter delivery numbers, which were strong. So you'd have to think that this would be a positive read into their earnings event. But of course, those are always volatile in nature. So we'll wait and see once we get those results Wednesday after the closing bell. But coming up next, it's time to look at On Holding, a name that's making almost a 7% move higher, hitting a new all-time high earlier in today's session on some bullish analyst activity.
Alright, see if we get a handle breakout here. Added some chop there around the highs.
Hey, go to the Patreon first.
%12 on BBIG. Yeah, I don't know what's gonna happen yet. If it's gonna be rejection or just a pullback and more liquidity grab. We've had the cup and handle move though, so you want the breakout after this, but sometimes it just makes it back up to the top, to the cup. So might make another one even. You know, pull back here and build another handle on this little cup. There's SPY, new high of the day. I did go long on the break. I didn't wait for the retrace, but still probably could get it. 451.21, 451.36. I see those as next leg up. Break that. Got clear skies. We're looking back to March of 2022 levels. Engulfing candle setting up on the daily there too. MACD flip bullish last week. Yeah, I think I'm gonna hold these futures. Barbecue coming down a little bit. BWAP's pretty high, so 34.42 might be a test on barbecue or VWAP there. Is a pretty big level we're coming up to. Oh, there's a big red candle. So here's your retest. Now we'll see how far up we climb, but we could be building a head and shoulders now too. Shoulder here. Maybe a head at 451. Give me triple bottom. 1825 calls. These three? I don't see triple bottom. Showing like the intraday. I still see his head and shoulders that hasn't really played out yet. Bullish case, you want to see it bounce on this level. Otherwise, I think we're probably going to get down to 20 or even the teens. There's your retest. Intraday. Yeah. Yeah, you can see it'll move up to VWAP at least. That's GME, not Cosm. What? What's Cosm doing? Cosmo Kramer, how is he? Look at that. Flat trading. Barbecue wanting to come down, hasn't yet really. Same with Upstart. That red candle kind of turned all these to red. Killed the momentum for some.
That's a major concern for so many of these names. I mean, C3 AI is another one that comes to mind that has had a run this year. So then what do their earnings look like going forward? Because we'll be able to meet these really high expectations. But as far as Palantir goes, Alex mentioned this is almost has like meme stock potential, but I was shocked to see its percent of its shares that are sold short is only like 7%, which is well below like AMC, GameStop, Carvana has like 62%. So this name, while we do see this really resurgence in interest in Palantir, I mean, it's not seeing the same amount of short selling as the other meme stocks.
Yeah, absolutely. And I think a big part of it is the AI aspect. I mean, this name has really been kind of set for this AI atmosphere before ChatGPT and other names really started to push forward, and that's really given some legitimacy to the name for a lot of investors out there. That's why we have seen some of this kind of meme stock push behind it, but there's also been your standard investors that are really looking at the facts here. And you talked about new deals. They're continuing to see them.
Carvana could be a good trade.
Expand their partnership with Carosoft Technology. They're
consolidating.
For Palantir, which will make their Apollo platform more available to the public sector. Yes, about 60% of their revenue comes from federal government.
Can't wait for a breakout on one like that.
By those defense applications, but
BBBYQ ripping 20% now.
We've seen from the company for a long time. Their AI side of the platform could push over into their government revenue as well. And I think the expectations are high. And so it's not just that meme stock craze. We are seeing investors look at this as more of kind of a long-term name with a big runway for AI.
Yeah, and perhaps seeing some signs of maturity in Palantir. And I do recall from discussing this name all year long, we've gotten major fundamental and guidance updates that have propelled shares higher. It hasn't just been all on hype, like you said. So important to differentiate this name from the meme stock nature in which I think a lot of times it was associated with, at least in former years. But we will leave it there. Appreciate the breakdown on Palantir. Jeff Pierce,
like that on SPY.
Trading at TD Ameritrade. That does it also for Alex and myself. For Next Gen Investing, coming up next, we have the watch list. Caroline Woods hosting today.
And I is not looking pretty. Needs to bounce here a bit. There you go. There you go, SPY. 451.21, let's go. Coming up on 2 o'clock. Thank you guys for your support today. We're at 37 likes on the stream. Got barbecue coming down to VWAP now. Appreciate your thumbs up. I am Warren Buffett. %, on BBIG. Gonna grab shares of this thing. 4 hops. GME climb back up to VWAP. Upstart kind of rejecting that resistance just below it. 53.75. Here goes SPY. About to make a new high. Run calls are up almost 40%. That is neat. Things just escalating. The breakout on run is a lot more clear to me than the one on Zoom. Or wait, no, it's the other way around. No, Zoom's just good also. They're pretty similar. There's still like another higher resistance level, which run is now at. Also has this horizontal resistance that converges right there. Makes me want to sell these calls today and rebuy. I might short some calls into it actually. This is the way. I'm not using a day trade. Have 2.5 or some 23s. Okay, I shorted the 23 weekly. So if I didn't do a calendar spread, if I did same date, I would have received more premium, but the decay wouldn't have been as fast. So I feel like this is probably the way to do it. Just do the weeklies and then close back out of it. Kind of what I was doing on Beyond, but I never bought back in because the chart didn't like. SPY consolidating up here, I guess. Above the level though, so that's still bullish. Or C-tweet, huh? Tweet barbecue to the moon. There's a sell-off on barbecue back to VWAP. Thanks, Nighthawk, for your retweet, man. I appreciate it. On today's stream. Ryan Cohen. I don't see a new tweet. Oh, he's replying to someone else? Satya. GameStop is a large Microsoft customer. I've been trying to reach you and being ignored. He's just trolling everybody on Twitter. Really everybody in the world. He's maybe serious with his dog. And I don't know. He's married? I don't even know. Maybe he's not married. Satya Nadella. Works at Microsoft or something? Oh, that's the CEO of Microsoft. There you go. I had no idea. You just tweeted the CEO of Microsoft? I've been growing up watching Hyderabad playing Karnataka. Is that like Indian stuff maybe? I'm looking forward to that same energy and excitement this evening with those soccer teams? With MLCS Seattle Orcas versus San Francisco Unicorns. Go what are these teams? Gotta be soccer, right? And then he responds to that. Just totally unrelated. GameStop is a large Microsoft customer. I've been trying to reach you and being ignored. Oh, that's awesome. Totally unrelated to his tweet. Alright, I might... Let's see. There's an RSI divergence here on the 5-minute. Might be closing out of these futures. Not liking the movement after the breakout. Got to move. He's talking about his like favorite soccer teams and childhood memories, and like I haven't been able to get a hold of you. What? Fisker's up 11%. Maybe RC is gonna be setting up a huge customer service company, database company, to help big companies manage customer service. That's what he should do, with his blueprint being Chewy. That's G-America. It's the America of companies with good customer service. G-America. Really regarded ape as well. Barbecue, flush and blow VWAP now. It's up 7.6. It's come down about, what, 7% from the highs. So made the whole move to resistance in one day. And now we found a new range. That's why he also is bypassed. Oh my gosh, Trace. Jimmy tried tech support for Microsoft Windows. Seems like he should. I mean, he's that was their trump card with Joey. That was their strong suit. That's what pulled, big thing what pulled the market share from Amazon, the way they were able to do it. So Nagel is Trump up 200 moving average. Yeah, it's looking good. 9.25. I haven't been watching Neg today. BEA beautiful. Just been watching my options go up. Ching ching. Yeah, I know this thing really hasn't even woken up yet. Well, it kind of has actually. That volume is crazy. But it could still get even more crazy. Yeah, volume today is really low on it, huh? The drops happen faster because people are trying to get out, and it's probably triggering stop losses, so they come faster, more accelerated. That's my guess. There's not liquidity. Look at that guy's bow tie.
I think a lot of tax efficiency in the planning. I feel that one of the biggest expenses we have is that 20 to 30% on average taxes going out in a household. So doing some tax planning with potentially upcoming tax changes on the next administration, those kind of things.
There you go, SPY. Thought I'd get shaken out.
It's pent up, but we're also hearing the conversation about, changing the idea of should I right size my house right now? Should I go buy a new car? These high interest rates definitely have retirees scared and wondering if they really will have enough money to weather the storm.
So Alan, given that you're an investment advisor, what is the investment strategy right now, given how far the market has run, and also given all the uncertainty that's still out there in terms of how many more hikes we're going to see from the Fed, in terms of what the economic repercussions are going to be from those
Repercussions.
What do you do?
Repercussions?
Well, here
I've heard it said that way.
We deal more with the retiree in general as the company's retirement solutions group. So as we're making that journey to and through retirement, we're looking at the client's goals, what they're trying to accomplish, and really dialing down. So we do use insurance products as well as security products. And I think transitioning some of that fixed interest risk between bonds, between dividend paying stocks, also considering some insurance products that can protect your downside, they will help to weather those storms. And that way you can choose between maybe using annuities, maybe using securities products, whichever one is the best at that time to take your income.
Getting some volatility on the ups.
And not use strictly equities for everything. We do use an insurance mix. So we find that works very well for a lot of clients to give that safe protection on the other side.
Do some of these retirees, though, want the triple-digit gains that AI plays that are providing this year? Are they a little bit more eager for less slow and steady and more of some of these high flyers?
Yes, but that's where we got to sit back and say, whoa, what is the goal? If you've already won the race, right? If you're making 5-6%, and that's what you need to maintain your lifestyle, not run out of money, does it really make sense to go for that much risk? Or maybe
you're high the day they're on SPY.
Just carve off a little piece. Let's go play in that space. If we lose it, no big deal, but we can afford it. So we have that conversation with our clients to really understand, why are they wanting to do it? Is it a need concern? Is it a greed concern? A little bit of both. So, and then we find that balance. So a lot of our clients will have like a play account that they'll put in their regular, where they'll manage and we'll just help them with it. And then we manage the plan. So a nice balance of the two, I think.
So they're up or they're down.
And it's not all your eggs in one basket, as we all know. It's diversification, not diversification within money, with financial planners, but
you figured it out, Trace.
In product, in solution, and
no, Weebles is all free
within that organization. So it's not all in one space.
Okay, we'll leave it there. Alan Ronnie Becker, Retirement Solutions Group and RSG Investments. Thank you so much for your insights.
Thank you.
Later this hour, Tesla's long-awaited Cybertruck is finally in production. We'll examine what that means for the EV market. We're also diving into a new report on the importance of decision-making skills in executive hiring. And our panel will break down what to watch for when Halliburton reports earnings on Wednesday.
I think it's topping somewhere around here for the day at least. Maybe buy those short calls back tomorrow even.
Stay with us.
Just had to capture some of that 40% gain in a couple hours. New high there on SPY, ripping up. Barbecue bounced off VWAP a bit. 34.70, it's 11.2% up. Upstart's up 14.5. BBIG up 17. What I can do when I close the short calls, I can take that profit and add to my longs. This is the way. 7.5% on barbecue sauce.
That most likely a lot of the stimulus money was going to be run out in the summer months. But to offset that is all of this money sitting in the money market funds, over $5 trillion, dollars sitting in investable
Pretty
assets.
bullish on neg there, aren't you, Southern?
That could be moved to risk assets if and when the media, you guys, declare
Glad I
that
got
there's
more.
no longer a recession. So I think a lot
Right
of
when you
investors are
subscribed, I said, all right,
cautious,
I'm getting more for this chap.
about investing because if you turn on TV or read the newspaper, most of the pundits have been predicting a recession. Many of the smartest economists have been predicting a recession and job losses. It just hasn't materialized.
Yeah, it's the most forecast recession that has yet to come yet. But also in your notes, you're saying you're counting on a rate cut sooner versus later. So if it's not a recession that forces the Fed to cut rates, what is it?
Yes, I think it's inflation. And the last inflation number that we saw was in the right direction, more along the lines of what I would have expected a little bit sooner. It's just taking more time.
Might short some calls
so
in this
I would
thing.
expect that instead of a recession causing lower rates down the road, it could be, that inflation comes down a little quicker, and the Fed will then have political cover to not have to continue to raise. I know that it looks like the futures market's betting on at least a one raise coming up this month. But if they can pause then and then no longer raise rates, but maybe even a rate decline, a decrease before the year end, that would be very bullish for equity investors. Again, I think once the
Have
sentiment
a big spread to be.
from so negative to more positive, I think
Putting
a lot
calls.
of that money sitting on the sidelines could be going into equities. And that just is, we're just not there yet. But a lot of those pundits are starting to change their tune, although some of them are still sticking to their thesis and just saying that it's going to be later on that we're going to get this recession.
So, Jimmy, as you said, a rate
Generac
hike next
doing.
week seems pretty much all but certain, according to the Fed funds futures. But what if we hear from Chair Powell and he sounds more hawkish, or he talks about further rate hikes? What could that mean for this market then? Because if a pause is bullish, what would more hikes mean for stocks?
Obviously, it could cause a little short-term volatility, but I think investors have sort of priced in the top, and that whether it's one or two or three more hikes, I think investors have priced in the fact that we're very close to the top, if not there already. So, if he sounds a lot more hawkish, I would be surprised with this last print. I personally feel that he's been good at communicating what he
either on
personally
SPY.
believes could happen and will happen, and I know that he wants to orchestrate a soft landing. I won't give he or his other Fed members credit for possibly getting a soft landing. I think they started raising rates way too late, and they probably should have front-loaded the hikes so that we didn't have to go through such a period of time of massive hikes over this last year. But so I hope that he has enough room to not have to, or at least reasons to not have to increase rates down the road, maybe after this one. But really, it's going to depend on inflation. And hopefully we'll end up with not having the big declines in the jobs, and that unemployment is not an issue going forward. And I think those companies earlier on in this year, Q1, most of the major big tech companies that were adding on to their
99% retail owned on neg, you think?
really, they were the ones that announced a big layoffs, and I think those companies will have an opportunity to have better earnings because they've right-sized their labor cost.
So speaking
All right,
of big tech,
making
when it comes to investment
the
strategy,
second
you advise a barbell
side of this
approach
cup here on SPY.
Magnificent Seven on one
Made a little
side
cup
and
handle here.
value on the other.
Breakout. Now we're
Where
gonna
are you finding value right now?
make this larger one.
Well, I would say that I think
I'll look to
investors,
close around
it makes sense to have
441.21,
and I
somewhere in
think
that
you should
range.
stick with quality growth, but having some of those names that are part of that group of seven that have really
And then
led the
reloading
market
if we
this
get a
year. One thing to note,
handle.
if you're an equity investor and you've been investing into ETFs or index funds and you're buying the S&P 500, now it's been well talked about as it has been in previous years, but now these top seven companies represent a pretty large portion of that 500 index. A lot of money has been moving to the equal weighted S&P 500 funds just because of that reason. So I think investors need to know that they're concentrated in big tech when they choose S&P 500. But I do believe those companies, or some of those companies, still have more room to run. Once we get past the next few months, I think there'll be a little bit of a lull with interest rates possibly creeping a little bit higher. But if we do end up getting that pause and we do end up getting a rate decrease before the end of the year and we don't fall into recession, I think those stocks have another a leg to go. Now, on the other side of that barbell would be value strategies. In our investment committee, we study relative strength, and some of the sectors that have been gaining strength over the last
Big candle on
60
SPY
days
there.
are the financials and industrials. Industrials had a great June, and I think that, again, having this approach of having quality really across the board, whether it's growth or value, makes a lot of sense. And the same is also in fixed income.
All right, and financials having a good day today. Best performing sector in the S&P 500. Hasn't necessarily been the case so far this year. We have to leave it there, but really appreciate you joining us.
Thank you.
That's Jimmy Lee of Wealth Consulting Group. Coming up next, we're diving into the EV pickup truck market.
Getting close just with that 1 5-minute candle.
Industry and other auto trends you should be watching. Stay with us. We'll be right back.
Big red candle off of that level. Lift is up 2 1/4. Confluence up 2.8. Links up 5. Rats down 1.6. Snaps up 2. Those calls are actually up, those snap calls. Zooms up 3.8. Ladoc 1 1/4. Goes up 1.
different buyers.
Yes, exactly. I agree. They attract different buyers. I mean, the Ford's F-150 is going to attract a more traditional pickup buyer, especially in for commercial use. The Cybertruck is more of a consumer truck and more of a unique like off-road or SUV type of vehicle.
All right, Spy, what do you got up here?
Go after different markets. Even though the pickup market has crossed over, there are a lot of people who buy, the luxury or deluxe appointed pickups as just regular vehicles that happen to have a rear bed instead of a trunk or a back cover. But again, it's the sweet spot.
Not wrong. Most people that buy trucks don't use them for trucks.
Sweet spot of the automobile market, and Tesla will attract more buyers. Two Teslas that may not buy the Cybertruck, but may buy another Tesla. And it also increases interest in electric pickups from Ford, especially Rivian, which is the leader right now, and the upcoming electric pickups that are coming from General Motors.
So do you think pickup trucks in the EV space are also going to be the sweet spot, or do you think that it's going to take a while to see that customer adoption?
No, I think it will as well, especially with these announcements recently from a large number or several automobile manufacturers that are going to join Tesla's charging network. That's been kind of the missing link for some of the other manufacturers, that they don't have the high-speed charging network. So the fact that Ford was the first to announce, and then GM, and then subsequently Rivian, Polestar, Volkswagen, they are all, several others have announced they're joining this Tesla charging network, because it is a major boon for Tesla. And also it moves the industry forward, because other than using the Tesla charging network or some of the independent...
We might get one little higher push before we get a handle.
There are not a lot around. Tesla has the most by far. And, everybody asks about EVs, how it works, where you charge them. And over time, the batteries will last longer, they will charge faster, and there will be more places to charge them. And Tesla, I think, helped the industry make a great leap forward in that area.
Well, Tesla shares are already up more than 130% year to date, so is seeing strength on the back of the Cybertruck announcement. But how much higher can this stock run, and what's
I've been trading the yen futures on the other screen. That's actually, I've been doing it on the TD account. That's what you've been hearing me in and out of today some.
A run rate that's close to 2 million. It's really incredible. So there's the ongoing sale of existing cars. The Cybertruck will contribute, but also the value of the charging network. That's like a whole nother point of value for the company, because they have the most.
Yeah, Nag wants to make a new high there.
Speed chargers in the U.S. and in Canada, and they're going to be adding more.
See if it
the value of that network
rejects this high or breaks out
and the delivery numbers
of last week's high, 1630.
Because of the fact that Tesla has cut prices to really spur demand. So
that breaks well on our way to 189, really $2. I'll probably roll up my calls to get up to $2.
Tesla's focus most recently has been cutting costs.
I have 1.5s.
If you will, the most efficient. I don't want to say the low-cost producer, but the most efficient cost producer, and maintain margin. And Tesla has had several advantages to the margin in the fact that they are both the wholesaler and the retailer, the manufacturer and the retailer, and they have also never really spent money on marketing. I mean, the fact that just everything Tesla does gets talked about and reiterated everywhere in the media, on social media.
Okay, I'm closing out of the longs.
I mean, Elon Musk has just done a phenomenal job in building and promoting this company.
I'm out.
So I think that they will be able to maintain their, talked about or targeted.
Next trade will probably be after hours, after the futures market opens back up. Unless we make this handle quick and shows a reversal.
You talked about Tesla cutting prices. I'm curious, do we have a set
But yeah, I'll be going long again.
I remember it was 40 to 70,000, but that was back in 2019. Is there an update to that?
I haven't seen one, but yeah, the base was 49, 50,000. I guess it goes up to 80.
38.2% will be about VWAP.
They're going to have to probably see the demand. I think a lot of the initial 400,000 orders they took almost 4 years ago, some of the people maybe put orders down to wait and see if they want to get it. Some of those may have bought other cars in the time, but it looks like they have a solid demand pipeline for it.
Might as well ride the shorts down.
All right. Well, I won't be ordering one, but I am very excited to see one on the road at some point. Ivan Feinseth, Tigris Financial Partners. Always good to have you on the show. Good to see you.
Thank you.
Still ahead on the second half of the show, key takeaways from a new report on the importance
Dude, they stinking rats.
executive hiring. As we head to break, let's take a look at some of today's winners and losers in the
Successful? No, not yet. I would be, but my first trade to get into it was just completely careless, so I'm just climbing back out of that. But yeah, I've been successful since I've been not an idiot about it. It's pretty nice. Yeah, it's got yeah, I like the way it trades. It's pretty smooth, it's pretty predictable. Following patterns. I still have to kind of figure out what economic triggers will cause big volatility on it, so always have to be aware of that stuff when trading currencies or whatever indices. But yeah, I think there's been more liquidity on it just since it started to bounce in the last month or so. There's a little bounce on barbecue. Bitcoin looking dumpy dump. Dumpity dump dump. Right now on the longer time frame, more macro, I'm trying to figure out if it's consolidating here before it keeps rallying, or if it's just going to top on the yen. Because, well, actually, realistically, it just made a big cup. So I've been kind of scalping this handle on the way down. I think it probably has more down to go, though, before it's bottomed. So actually this morning I tried to jump into a trade on it. Why couldn't I? Oh, because I was still holding barbecue, so I didn't have enough margin. And I wanted to go short on that head and shoulders, like a perfect head and shoulders in the 5 minute. And I didn't do it because of barbecue, which was fine. But yeah, it ended up playing out perfectly. A nice move. Played the bounce on that inverted head and shoulders on it, but it kind of chopped me around and stopped me out a couple times. Now it's back to VWAP, and I'm looking for a short entry, but I just closed out again because bouncing back up. Buys come down here. Not too much. Barbecue came back down to VWAP 34.45, made its way up. I don't know when you left, but made its way all the way back up to the resistance. So made its cup and handle formation. Now it looks like it's, see if it makes another cup and handle. Got our cup here and looking for a retrace. If we can't bust through from here, probably have to retrace for some more liquidity to push back up. My question is, do we count from the bottom of this wick? Or do we count from the bodies? Do we count from the bottom of this wick for our retracement? Because those were just crazy on the news. So I don't think I'll count from the bottom of this wick because that's not even, that's too far of a retracement for that. Can't handle over there. I think it's probably more the bodies here. Is kind of that range. That's what I'll look to. But I don't know if I'll trade it, but I'll have it charted for you guys. There's SPY coming down. Sure thing. Barbecue bounced a little bit on VWAP.
Like Intel, JP Morgan, Amex, Apple.
Looking to close my short on the SPY or the ES futures. We'll see. Maybe VWAP might make it all the way back to VWAP. Got an hour and a half left. Yeah, I like this short actually. The short seems like it's going to move much faster than this long did. The long was just a slow grind up.
I mentioned some of the big names that were leading the move.
Unfortunately, I didn't have my options for any of the bigger moves. I grabbed the calls at the handle here and ended up closing for a small profit there. So didn't get the huge move. If I waited, I could have done the puts from the top, but oh well. Another day.
Up to 31 on the banking concerns on a weekly basis. 18 trading weeks, 15 of them have now been to the downside as we begin this week. Only 3 to the upside, Carolina. Pretty good reflection of the rally we've been seeing here, not only to begin the day, but to begin the month, and for the most part, what we've seen this year, which is really continuation of the lows that we saw last fall. So the VIX a reflection of that, Caroline.
Yeah, 31 seems so far away. I feel like it's always 13, 14, maybe 15, but I know the guys here like it when the VIX is a little bit higher, the traders, I should say. All right, you mentioned the weak Chinese GDP report that we saw over the weekend. That's causing crude to be under pressure today, trading just above $74, so still stuck in a range.
Yeah, we saw some overnight spikes, some intraday volatility. I think it was from 74 to 76, and then right back down on news of some, I think it was Libyan flows ultimately. But right now it does seem that with the indices higher, oftentimes you see crude track stocks higher. In this instance, it's not the case, though. Again, that Chinese data really being the focus for commodities, especially the WTI, which is, well, coming off and a bit under pressure here today. I did notice here that this is interesting because the dollar is actually lower here today as well. Keep in mind the dollar weakening and back to 15-month lows is what brought crude back up to that $77 level last week, but today again only up to 76 and then back down to 73.84, currently trading around $74, down by about 1.6%. But yeah, the GDP numbers, I think, the disappointing data out of China. Here you can see again that weakening dollar, so that's something to keep an eye on. It oftentimes bolsters commodity prices. Gold has benefited. I've been watching a bit play out there, but actually now that I look, it's actually lower here today, but hanging out around 1960. I think the bulls can consider that a win in many ways, but definitely watching here crude amidst some of those demand concerns, Caroline.
All right, we'll keep our eye on that. Ben Lichtenstein, thanks so much. Always appreciate it. Now let's welcome in our next guest, Aaron Mitchell, Feingold, CMO of Kingsley Gate. Aaron, thanks so much for joining the show.
Hi, great to be here.
Good to see you as well. So, Aaron, Kingsley Gate, I should say, is an executive hiring or search firm, and you just completed a recent report that showed a lot of executive-level frustration. What has executives so upset right now?
Well, I will tell you, I think it's no surprise based on a massive amount of literature in the market that executives around the world feel that decision effectiveness at their organizations isn't optimal relative to where it could be. But the thing that we found that was really interesting and a bit surprising was that the consequence of that level of dissatisfaction or that observed level of suboptimal performance around decision making has actually inspired people to quit their jobs. So we had 34% of senior executives telling us that they actually resigned from a position due to frustration with decision making, and another 29% telling us that they've considered doing so.
There's your little head and shoulders being built on SPY.
Decision effectiveness or not feeling empowered to make good decisions. What does that mean? Who is making these decisions then?
Bonjour.
One of the things
Head and shoulders on barbecue.
is that very often decision rights and decision authority tends to be a subject that's understood differently by different parties.
Where's barbecue? Where's Ryan? Ryan's bickering and caring to all the CEOs of major companies.
Interview stage, or if this is an internal mobility play at promotion time, having a discussion about exactly what decisions are going to be required or expected.
He's on a Karen activist campaign.
How authority ends up playing out in the organization and what accountability looks like tends to be a conversation that actually happens much less frequently than one would expect.
So their frustrations are actually leading them to take action and they're resigning. So what are the implications there?
The implications for any organization is you either have executives who are staying on board, who are dissatisfied in their current role and therefore not going to be able to provide as much impact to the organization as they otherwise would, or they're actually resigning, which has major costs, both direct and indirect, for the organization when it comes to actually going out and sourcing replacements, onboarding, and just the adjustment costs culturally of what it means to ingest a new executive with their own style that they bring to the organization as well.
So when we talk about
Ripping to close?
company priorities,
Oh, does it, Trace?
over the past year, it's been cost cutting, creating new
Yeah, the end's coming up more.
efficiencies, if anything,
Can't close that thing.
cuts. So should companies be having a greater emphasis on employee retention and this decision effectiveness in order to prevent some of these resignations?
Yeah, it's a great question. And the relationship that we've observed, which is very interesting.
Potentially, this could be the whole handle right here.
Bringing on new
I
executives
suppose.
tends to be one of the drivers that can
It's
help lead a
23.6.
company to improvements in decision effectiveness. So interestingly, our survey respondents cited factors like company leadership and the introduction of new
It'd be
employees
pretty
brought with them different
small
decision-making
can or
approaches.
handle.
Those factors were cited well ahead of traditional drivers like process improvements, new tooling or technology, or even access to data. The thing that's really interesting is that then we saw that an improvement in decision effectiveness is actually what led executives to be satisfied, happy, productive, and to stay in their roles. So that creates a virtuous cycle when you are able to hire people who help up-level the game of decision-making at an organization. That creates an environment in which everybody feels decisions are being made more effectively, and then it makes executives, as well as the entire rest of the employee population, feel really fulfilled and satisfied. And
Is that a computer share purple?
and continue to drive toward impact.
DRS your shares, everybody.
Executives are willing to resign because they're unhappy in their roles. Of course, that's fair, but what does that say about the state of the labor market? They must not be too concerned about getting a new job then.
It's a great question. I mean,
Kind of want to get puts here on SPY.
It's a question of velocity in the sense that if you have a lot of
Stick to my one trade today.
resigning, then there will be more vacancies, even if the labor market isn't adding new executive roles. Although, of course, there are always going to be smaller or high growth companies that are looking to scale up and therefore do require new executive talent or require executive talent that brings in perhaps skill sets or experience sets that are different from what exists at the company currently. So I think that is totally fine, is totally fair. And I think the other thing too that executives are thinking about as well is what's the value of their time? And so I think many of them consider possibly resigning potentially from a role without necessarily taking another one right away. If they are, for example, demotivated by the lack of decision effectiveness at their current organization, they may be willing to take some time to really scope out what decision culture looks like in a new organization before accepting a new role.
So as the CMO of a hiring firm, what's the status of the labor market in your eyes? And also, I'm curious, what's the status of remote work versus in-person work? Are people just getting used to going to the office more? Or are they still looking to work remotely?
It's a great question. The first one around the state of the labor market, I think we are all very much looking forward to the second half of this year. We think that there's a lot of momentum and acceleration. We think that some of the news, for example, about inflation and employment do indicate that the soft landing many of us had hoped for is looking more and more realistic every day, at least in the US economy. So we're very much expecting to see hiring at the executive level continue to accelerate. Regarding your question about remote work and in office, of course, one of the things that remains true and probably has been even since 2020 is that this is a very firm specific or organization specific, A, set of policies, but then B, of course, as we all know, actual cultural elements that may or may not actually align with those policies. One thing that has been very interesting is seeing how different industries, different geographies, and even organizations within the same space really differ in terms of the extent to which they have an in-person culture, the extent to which collaboration occurs already across, for example, geographic boundaries, in which case then there isn't really an office to go to if you work with Switzerland and India on a regular basis, and also the extent to which employees are excited about the benefits of being in the office versus the benefits of working from home.
All right, we'll leave it there. Aaron, Aaron Mitchell-Feingold of Kingsleygate. Really appreciate all of your insights. Thanks so much for joining us.
Thank you for having me.
Still ahead, we'll bring in our panel to discuss potential upside in Halliburton as it prepares to report quarterly earnings on Wednesday. Stay tuned.
Coffee.
We'll be right back.
Thanks for the coffee, Tasty STI. It was delicious. I was making a joke about DRS. We do have a head and shoulders here, but we are still in this uptrend, so could just be consolidating. Still drinking mine as well. I just have a little bit. I have it strong, so I only get a little bit. Yeah, I just stopped out on my short there. BBBYQ 26%. Is that where it was? No, it broke out again. Definitely want to enter this trade. Hard to not feel like you're chasing. $34.80 on barbecue, up 11.5%. I fell asleep on the hammock. Rough life. Is that a hammock on your boat?
Gee, let me think.
Gee.
Sure.
Bruce. Bruce, thank you for the donation. Just a sleeper donation. No comment, not even chatting. What a legend. Just so happened to be Ace Ventura, otherwise known as Bruce Almighty. Thank you, Bruce. I appreciate it, man. Ah, Bruce B. Okay, now I recognize you. Well done, sir. Appreciate it. Thank you. Very generous.
Wall Street is looking for. And
gee, let me think.
One of the things that's interesting about this company is that this is not a company I would be buying, because it follows the energy, it follows the oil prices, and you can get a much better dividend from some of the other oil providers than Halliburton. So I find Halliburton sort of like maybe like a kiss on the cheek. Really nothing that exciting. It's not going to hurt you, but it's not something that I would be plowing money into.
All right, we'll talk about some of your other picks in just a second. But Jonathan, you have a little bit more modest of a price target, I would say, $40 price target with a buy rating. So that's mid-single-digit percentage upside versus 25%. What do you think drives it higher? And the fact that we've already seen, 14% gains so far this month, could any good news from Wednesday already be priced into shares?
Look, I mean, we think that international activity. So international activity makes up about.
This looks like the murderer in that one movie.
2022 revenues. So with the modest uptick in international activity, we think it, could surprise more to the upside. That could
neg, breaking out.
any market
Yes.
that can be seen.
Broke that high with some volume.
So
Do it.
we're pretty optimistic with
165, 9, 12.5 on that.
Outpaced U.S. activity since towards the tail end of the pandemic. So we think that it should drive significant margin growth. But I think with U.S. activity could surprise more to the downside, given that we have seen significant drop in U.S. rigs. But we're pretty optimistic that international activity could offset any decline in U.S. activity.
Okay, so Ed, going back to your target price of 46, you say it trades hand in hand with oil prices. Not necessarily the case today, but what price does oil need to be at for Halliburton to reach 46?
Well, you're looking at about $85, $90, and but they tend to correlate very, very strongly with each other. You can look at any chart and see West Texas crude and Halliburton, and they're kind of a mirror image of each other with a little bit of a lag. Oil services tend to lag a little bit from the spot price, but they eventually catch up. So about $85, $90 on oil.
Jonathan, what's your expectation for oil prices? Do you think 85 to 90 is realistic, especially given this really kind of sluggishness out of China that we've been seeing post-pandemic?
Yeah, based off of what we're seeing, break-even price, out of the Permian is anywhere from $50 to $65 a barrel. So, with oil trading at a little over $74 a barrel right now, there's still a significant level of profitability. However, we think that there's going to be some slight pullback with some E&Ps. So, with respect to production, given that there's the rising recessionary risk, so we think based off of most recent EIA estimates of $74 a barrel or $79 a barrel. So that $75 to $80 price range is what we are basing our estimates off of.
All right, and Ed, despite that pretty bullish price target on Halliburton, it certainly doesn't sound like a top pick for you. So tell us what other names you like more.
I love the utility sector. I think the utility sector has been beaten up at the beginning of this year, and now that interest rates are starting to go sideways and maybe even a little lower, the dividends on utilities are going to look more attractive. But the most important thing is that the cost to generate energy has come down with coal prices and natural gas prices dropping significantly. So I think there's a lot of profit to be made on these utility companies. So across the board, I just love utilities.
And Jonathan, any other top picks or buy ratings that you have?
I continue to climb here.
In this space?
We have a buy rating on Schlumberger. Actually, excuse me, a strong buy rating on Schlumberger, given that they do have sector-leading international exposure with the oil services subsector. So we think there's a lot of upside, given that there has been
14% on Upstart.
In international activity,
Big, almost 12%.
U.S. activity. So those are our two buy and strong buy ratings within the oil services.
GME, 7%. Look at you.
CFRA Research and Ed Bukowski of Chapwood Investments. Thank you both so much for those picks and for your insights. And thank you so much for watching. Stay tuned because Market on Close is next.
A lot of these charts look similar to this. Makes me think the market's not going to downturn for a bit. GME used to go crazy, man. It's $69. So I guess we're kind of looking for a cup on this thing. Put it in my notes. Look at it later. Oh, I had a long snap in my notes. Never did it. Had it on that day. I guess today is just as good. After some consolidating. Me down 0.5%. Barbecue just under 11%. Run, keep going. Run, testing that high. Hour. We made it. Congratulations. Thank you, guys. We're hanging out. Got 1 hour to go.
It was the first really to catch a big bid this morning, and it kept on.
Barbecue, little bounce there. Little barbacoed. Top of that barbacoed range.
The better our stock market has fared, as Chinese companies were under some pressure. It put into perspective the strength of our own economy here. Not exactly doing 6% GDP like they are in China, but doing better than expected. And more analysts on Wall Street coming around to the notion of a soft idea, all the way down to folks like Marko Kolanovich at JP Morgan and bears that have been warning about deep recession, quieting as the data have threaded the needle between deflation without a major fall off in the economy. So the dollar continues its descent, and that is the primary feature of this soft landing right now. A weak dollar continuing to, on a daily basis, fade from any strength. The dollar was a little bit higher earlier as we started off the session following the weak Chinese data. The notion that their central bank might have to be stimulative. There was a little bit of a bid into the dollar, but we lost it. Bonds are a little changed today. The 10-year once again sitting around 3.8, so yields coming down a tad. That's the macro backdrop that's been very conducive to this.
Bye.
Now here's the
more ups.
Is very interesting. And after we
Excuse me.
A good deal of the
Just
spring
hanging out around this other side of this cup.
3.66 and 3.8. I think there is good reason to suspect technically some support for the yield in this range. Maybe bonds will freeze for a moment or consolidate. That's the expectation I have going into this.
Yeah, you can't trade the options. They're just position closing only, basically. Closing by expiration or by exercise. Otherwise, they're just gonna be worthless. Or no, you can maybe close them.
There's not a lot of economic data either, so that's another reason why bonds might.
You can't open new ones though. But yeah, you can close them. I think super liquid. I'm not assuming you can get any. At a good price for them.
With inflation data, jobs reports, and the market's conviction.
I haven't even tried to look.
Basis point hike this month from the Fed, which the Fed also.
Still have a lot of open interest.
And now there is some agreement. So unless there's a big shocker here this week,
But yeah, this. Yeah. Once he's getting the money, then we'll see what happens. You might start to see the premiums move some.
Go sideways and remain calm.
I don't know who's like able to buy these.
Copper and crude.
I think it's just probably market makers providing liquidity.
They've stayed under pressure throughout the day after getting smacked overnight with China's weak GDP print. And that's important also to the bond and the dollar conversation, because really the only macro risk right now would be that the economy is so stable it starts to reheat and generate problematic inflation. But it's hard to imagine that happening with crude staying suppressed the way it is below $75, and even something like copper, a key commodity indicator, also quite subdued. You can blame China for it, or you can thank China for it. Right now, with the market's focus on deflation, probably it's a thankful thing that commodities are staying under some pressure. That reduces the risk of a big shocker on the inflation front over the next couple months. Now, a few other encouraging things. Not really sure why.
Got some volume on that little pop on barbecue. There's your double top on let's buy. Might grab another short here. See if we can get a real handle being formed.
And peaked out since the blow up in the spring earlier this year from Silicon Valley Bank. So
We'll close it if we break to the highs.
Trading through that on earnings, that would be a very encouraging sign that the market is becoming less concerned about that sector. Also, we're going to be talking chips a good bit. Very important group, of course, constantly in the political back and forth between the U.S. and China as a bit of a volleyball for policy, but the prices have not been restrained or constrained at all by that. We've got new highs for the year in the semiconductor group. The cloud companies are trying to follow. It's a pretty peachy day. If you're bullish, this is what you're looking for heading into a very busy couple of weeks for earnings. Let's start that conversation about the chips and the semiconductor world with Renita Young and Kevin Hanks joining me here, our team, this afternoon. So, Renita, this is pretty interesting because we've been so focused on all the AI developments, the earnings that these companies in the chip-making world have to live up to, but there's always this sort of a lingering policy risk.
13% on neg.
We'll get some
Do it.
on that from Washington this week.
Attempted to short some calls. And
Reuters is reporting that the CEOs of Intel and Qualcomm
we'll just close some and reopen some tomorrow.
talk about this, and that the main point of this entire visit is to make sure that
I'll
government
leave it.
officials know the full effect of continuing to restrict certain chips.
Snap calls are up
from being sold
15%.
to China. And so Reuters also reports
Not bad for a
that
3% move.
most companies, most
On
US
monthlies, out of the money.
get about 1/5 of their revenue from China.
Interesting.
And that's how detrimental it is. When we first heard about some restrictions, it was back in October when we heard
Yeah, Snap
that
looks
it
good.
impacted
I'll get
NVIDIA
more on that. I want to
earnings,
dip.
right? And so NVIDIA created a chip that it could be able to sell to China as a result of that. But these most recent
When's GME gonna buy
measures may
Funko?
impact that chip as well as Intel and Qualcomm. And so it'll also impact shipments that are being made to Huawei Tech.
Huawei.
And so this would impact Intel because Intel is actually preparing a new AI chip that could be sold to China. And these measures could impact, of course, we said, Qualcomm as well. But
Did you say
most
Qualcomm?
recent measures also include other
What?
things that make NVIDIA and other chip makers
Huawei and
a
Qualcomm?
permanent loss of sales. And this is an industry that, just as you said, over the top, a volleyball game, sort of, between the United States and China when it comes to this tech war that
You definitely don't need calls,
that's the best
no.
way to describe it, because we've been hearing restrictions in China. We've been hearing restrictions.
Yeah, since you can't write calls, and if you don't want your shares to get called away,
They don't really show any signs of
lending out your shares makes a lot of
maybe
sense.
these meetings,
Especially with that borrow fee, that's
the
crazy.
news and the meetings and what they come to at the end of them may ease that blow a little bit.
Yeah, and the Reuters reports, as they cite sources, has a little bit of ambiguity in it about which companies are going to be there. It seems like, though, the ones that we should be focused on are Intel and Qualcomm as being the most at risk. NVIDIA having a chip, too, that they would sell to China, but because they have so
See
much
if
else
SPY
going
breaks
on
this high
right
here.
now, doesn't seem like the
It might. It is power hour.
Qualcomm and Intel, though,
Unless it'll
are
push.
distinct laggards. Qualcomm in particular, actually.
Qualcomm in particular, for sure, because Qualcomm, it could
She does. She says it like that.
other, license that it
Qualcomm.
has a license to sell to Huawei.
Exactly.
And so that's one of its biggest customers. And so this could significantly impact their entire business.
Big deal. So we'll definitely stay attuned to that. But the group as a whole, breezing right through it, up 2% for chips. Kevin, backdrop on the macro, good. I mean, is there anything in this session that bulls don't love? I mean, it just seems like this is about as good of a day as we could ask for.
Yeah, Oliver, the only warning sign is everyone should remember, whether we want it or not, whether it's popular or not, we rely on China and they rely on us. So their weak economy can start affecting the bottom lines of some companies going forward. That's why you're seeing crude oil so weak today. That's why you're seeing copper so weak today. So what does that do for companies like Tesla and all these companies that really need a strong China for their growth? That's the only really variable out there. Besides that, Oliver, this is a second week in July, slow day without a lot of economic data. We're ahead of, the pace of earnings picking up here. Yeah, tomorrow morning is going to be more airlines and more banks, right, for the next day or so. And then the pace will start to pick up when we get to Wednesday morning. We get Netflix and we get Tesla. So, yeah, right now this has all the characteristics of a slow summer day, Oliver, that's just not getting your heart rate up. Kind of a grinding higher day, kind of drifting to the upside. But there's news coming. We'll get some retail sales tomorrow. That'll be fun. We get Bank of America, which is more similar to JP Morgan in terms of what it does. Then we get Morgan Stanley, which is more like Goldman and Citigroup. So we'll get some good looks at some of the financials tomorrow morning. The pace is going to pick up, just not today, Oliver.
Did I miss anything on the regional banks, Kev, on why they're higher today? You just think it's sort of path of least resistance, market's grinding?
Yeah, no, I don't see anything jumping out that would cause the regional banks to go higher. But I don't. I wish I had some real reason to pinpoint that. But the Russell has been strong, like you mentioned. Russell's been strong all day. It's pretty broad rally, but yeah, if you look at the financials in the Russell 2000, they are green across the board. So a pretty strong day there for sure. Why is that happening? No idea.
JP Morgan, good day, up 2.5%, breaking out the fresh year-to-date high, 1 year
Could be
high
that
too.
they're just following our financials.
Yeah, earnings tomorrow. Bank of America going to be important. Morgan Stanley too.
Yep.
The other thing I would say is that Monday, fresh off the weekend, there's a good bit of commentary from the sell side as well, and that's helping chips too, Renita.
It is. So Citibank opened a couple of positive and negative watch lists for a few of these names that we just talked about. Now, we do see it opening a 90-day positive catalyst watch on Intel and NXP Semiconductor, a 90-day downside catalyst watch, though, on Global Foundries, AMD, and Texas Instruments. And so it says that it sees that continued weakness in the handset end market for Global Foundries. It sees weakness in the analog market for Texas Instruments. And then for NXP Semiconductors, it's expecting estimates from the auto end market to continue to rise. And so for Intel, this analyst says that it sees upside to the estimates from the PC recovery that we've been seeing. It was a different story at the beginning of the year, as we still saw a little bit of a slump in hardware in PCs that way, but it's expecting a PC recovery.
All right. Interesting. So even in the face of some of that risk for Intel, a little bit of love for it here. And shares having an all right session. All right. What more can you ask for here? Potential stories that could keep stocks down, but it's not happening. There's enough bullishness and analysts going into the earnings season. Appreciate it, guys. Thanks, Renita Young.
Dude, tweet shift is still down, man.
Mike Dixon, he's the head of research at Horizon Investments. Mike, welcome to the show. Thanks for being here this afternoon. It seems like this market keeps gaining confidence day by day here. Should we as investors too?
Yeah, hey Oliver, thanks a lot. And look, it certainly seems that way, right? I think with a lot of the
Oh, there's a
positive
pop on
economic data we
SPY.
had recently and heading into this earnings season, we're really
Waiting
just
for that.
primed for that, macro to micro handoff. And
All
really
right,
just
let's see
looking
what you
for
got.
overall
451.36.
because that's exactly the theme we've seen all year. Economists and analysts alike have just underappreciated the strength of the overall economy, and we've seen a lot of strong economic data beats throughout the year. So heading into this quarter, I think that's exactly what we need to
Front run it.
Retake some new highs.
I like the way you put that, the handoff from macro to micro. It does kind of feel like we've closed the book in the short term on some of the great macro debates. I'm sure they will come back at some point.
I'm back at this chart on the yen. I closed out on the inverse head and shoulders thinking it broke the shoulder, but it's actually a cup and handle. That's where the inverse cup and handle gets you. Because you could see it as a head and shoulders, but the handle's going to pull a little lower on that shoulder.
Sector, thematic, group-wise, where do you think is the most potential for us to see that type of beat rate that we've been getting in the economy in the earnings?
Well, we certainly, we've got some more financials this week, which are obviously, really important for the market. I think next week's obviously the biggest week where we'll get a bulk of the market cap, of the S&P and the NASDAQ, beginning to report. And that's going to really drive set the sentiment for the rest of the season for sure. One of the themes we've just continued to see throughout the year, we saw it in the first couple earnings the last couple quarters where we've surprised just more than analysts have expected. I do tend to think heading into this season that'll continue to be the trend. I do believe we'll see more positive surprises than expected. And looking at the particular areas, it's tough to really look at an area like tech and say that next week we're going to get a lot of surprises. But to be honest, it's really tough to bet against them, especially with a lot of the hype around the AI themes and what that can do to productivity. So I think we're primed for some very interesting conversations from
Ooh, NNDM is a runner.
For sure.
I like the way you guys have
especially with a rando like you pumping it.
Factors, indexes, and groups in this chart from the Horizon Investments website.
He's already started to break out.
Shows the NASDAQ's incredible leadership. What I think is very interesting is the way growth as a factor is number 2, but then quality as a factor right behind it. How important is that connection between growth and quality, and what does that mean to you that a factor like quality has kept up with a factor like growth?
Yeah, I mean, one of the ways that we kind of think of a factor like quality is really more of kind of like a defensive take on growth. Growth doesn't necessarily mean high valuations, but it is often associated with that. We think of growth, we're thinking, companies obviously with high levels of earnings and fundamental growth, but also high measures of profitability and healthy balance sheets alike. And that's exactly what you see.
I think I'm going to do a video today, guys, so I'm going to cut the stream off before 4 and do some TA, same stuff you guys hear pretty much all day.
Very healthy businesses that are very broad based. So the growth
but it's nice.
Not the growth the late 90s
summary.
Or anything like that. They're certainly much broader based than that. And we look at a factor like quality. Those companies tend to score quite well on those types of metrics as well. And I think as we head into next week, we'll see if the market has priced them correctly. But I do think it is interesting, as you showed that chart, there's very little that has outpaced the broader market just because of how top heavy it is, driven by these large growth names. I think one of the ways that we think about that here is there's a lot more.
Also going to update on the Theta Farm options we've been selling.
Names, and there is being very overweight them. So it's something we just have to balance. And there's a lot of the market that can still participate.
Barbecue's up 10.5.
The strength that we've seen. That's one of the main takeaways.
Still in that little head and shoulders. I think it wants to pull back further for a handle.
Okay, so don't panic.
Squad. But yeah, it's looking good. Made the top of the cup today.
It's more skewed towards tech than it was 6-7 months ago. Because if you haven't touched anything, it certainly will be given that concentration. Mike, one last point is the last few earnings.
SPY, holy snap, pop, crackle. Did you see that? What the heck was that?
Decline at a slower pace than
I think it's so noticeable because today's been so slow that any like pop is just exaggerated. It literally hit right there. Oh my gosh, 451.36. It hit it on the penny. Oh, and it broke it. Crazy! Look at that rip. Oh my gosh. Wow. What the heck? It's squeezing.
Of course, probably a little more emphasis.
That's a SPY squeeze right there.
From an accounting standpoint.
What? Something happened.
To mess with those.
There's some news.
Accounting moves. So that's probably the main thing to be focused on is what those top.
So there's some news. Something happened.
And we'll certainly in the middle of it now. We're gonna
Powell said,
get a clean read on that.
No more rate hikes ever.
Commentary, Mike, a really good
Cutting.
connection between the earnings and the economy. A great setup for us on this Monday ahead of earnings, which get real busy.
That was crazy.
Absolutely. Good to have you here. Coming up with
Someone just got liquidated or something.
That was in focus about 6-7 months ago when recession was all the talk.
Whew.
Now that the outlook has improved,
Let's see what those calls
staples play.
they had. What did those go to?
Tech bid.
I don't need to see it. That's crazy pop through the high though. You can see how big of a resistance that is. With the volatility it popped with. Is that the whole handle? Is that it? No. Oh my gosh. There's the red candle. That was crazy. It's almost as if we're in a bull market. Nice, Hugh. Hopefully you closed them out there. Made a little something. Like an NDM. Do. I don't like options on such cheap stocks though. Look at that dude, the IB hasn't even come up. Crazy. Pretty good. Safe to say we've completed the cup now. Hey, trader. I trying to consolidate up here a little bit, huh? Really? Run is holding up crazy levels. Eggs holding up there. Snap still escalating. All right, 330.
Stores and their warehouses as shipping hubs.
All right. Walmart is doing better, it seems, than even.
All right, I'm gonna cut it off here. I'm gonna do a video, going over some TA of different plays I'm in. Of course, barbecue will be on there, and I'm gonna go over the gains in the theta farm, show the different plays we opened, what we closed, and yeah, that's what I got. Thanks guys for watching. Appreciate all the support today. Thank you, Bruce, for your dono. Thank you, Tasty. Appreciate your guys' generosity. Thank you guys for your likes on the stream. What are we at? 42. Well done. Thanks, Ace. Thanks, Trader. Thank you, Hugh. Thanks, Grant. Thanks, Squad. Thanks, Ariana. Thanks, Trays and Gunnut. Thank you, Bruce. Maui, Tasty.
Nice look at a group here that's underappreciated today.
Benjamin.
We'll certainly be in focus when Walmart earnings come around.
Passing Cloud. Thanks for hanging out, guys. Yeah, we'll see you on the recap in the video and the premiere. Be on chat in there, and it'll be on Discord. Up on there if you're not already. Thanks, guys. Appreciate it, man. Thanks, Ace. Sub up, like up, comment down. Happy money sticks around. We will see you on the premiere. About 30 minutes. Should have it wrapped up. Thanks, guys. See you soon. Peace out.